Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 24th day of July, 2013. Quick look at the numbers. The Dow down 19, S&P down 3, comp up 13, gold off $7.30, crude down $1.83. Those are the numbers on this stuffed up Wednesday. Every day I open my mouth, this different voice comes out because I'm going through this hay fever hell. Let me just say it. There we go. Four-letter word, hell. I'm going through hay fever hell. And it's the middle of the summer. I thought this stuff happened in the springtime. I don't know. I was oddly quiet in the live trading room this morning. It wasn't because I wasn't there. It was because, well, you can hear why, all right? And I'm working really hard to get this sound out there. So anyway, happy Wednesday. Glad you're here. If you're here for the first time, maybe you were at David's webinar yesterday, and so you're dropping in to see what this CFRN is all about. You know, we've been doing this for 8 years. I love it. I still look forward to it each and every day. Now, don't think it's not work. It is. But when you love what you do, then, I don't know, is it still work? Well, by definition, it is. It is. But I'll tell you what, if you can find work that you love, if you can love what you do, man, life just takes on a different and very unique quality. Now, I've had jobs in my life, more than a few, that I absolutely hated, abhorred. I would twist and turn in my bed at night, unable to sleep, constantly looking at the clock, counting down the hours before I had to go back into that office. Yeah, I've been through that. So, kind of like Richard Pryor, you know, I've been rich, I've been poor. I've had money and I've not had money, and having money is definitely better. Yeah, having a job that you enjoy is definitely better. Now, there's a book written by the very first person I ever interviewed in the history of CFRN, or the first, let me say the first author, Max Lucado. Met Max Lucado at a book signing, asked him for an interview, and he said yeah. And so we did an interview, and it's out there in the archives somewhere. He has since written a book called Finding Your Sweet Spot. I think that's the name of it. Actually, that might be the tagline. But that's what it's about. And it's about finding that job, that career, that life's work that is your sweet spot, that you do enjoy, that you do love, that you do look forward to, that becomes a part of you. And the book is written for probably 80% of the population, or 80% of the world, who currently aren't in the sweet spot. You know, I just know that I'm so blessed because I'm in the sweet spot, okay? And so I realize I'm talking to a lot of folks who aren't in the sweet spot. Get this book, okay? Just go Google Max Lucado, and it'll show you all his books. And this book, on the cover, it's got a big, like a golden Labrador, if I remember correctly. A golden lab, retriever, right, the dog, laying on the couch. And I just remember in my mind's eye. I'll look up the cover here later on the show, and I'll show it to you. But if you're not living in your sweet spot, okay, if you're grinding it out, going to a job every day you really don't like, it doesn't have to be that way. Now, Max goes into detail in the book. You can't just quit your job, walk away, and because you've got bills to pay and a family to support and all of these other things going on. But you can begin today to alter your course so that you eventually end up in that place. Now, you got to figure out what that thing is first, right? You can't just say, I hate this job and I'm going to go find something I love. No, no, no. You keep doing what you're doing even if you hate it, because right now it's paying the bills, okay? But you've got to start looking, opening up your mind, opening up your heart, doing a little bit of dreaming, looking around, and then when you find that thing, and after much prayerful thought, you know, and perhaps you already know, right? Maybe you yearn to be doing that very thing right now, but you know there's no way anybody's going to pay me to do that. That's what I want to do, but nobody will pay me to do that. Don't be so quick. Maybe there is a way that people will pay you to do that. Get the book, all right? I don't make any money if you get the book. And you can get it online. I'm sure you can order it. It could be on your doorstep in a couple of days. You might even be able to download the audio book. I'll give you a link later in the show that allows you to download one free audio book. If you've never taken advantage of the Audible trial free book that our sponsor offers, if you've never done that, today might be your day. And I don't know if that book's in there or not. This is just sort of a stream of consciousness thing I'm throwing at you, because somebody out there right now, you're unhappy, man. I'm feeling your vibes. Now, I got a stuffed up head and a runny nose, but you're really hurting. And my heart goes out to you. I want to help you, okay? Because I have been there. You know, and I just, even though my head's stuffed up, my nose is running, and my voice sounds weird, I'm blessed to sit in this chair today, and I'm thankful. You guys are such an important part of my life. You have no idea. And I received an email from someone yesterday that was very touching, and I may or may not talk about that email later in the show today. Let's see how things flow. We got some ground to cover. If you're new to the radio show, this is loosely how it goes every day. I come on, say hi, which I just did. I then go to the good word of the day, which is a short little bit of spiritual encouragement. We then take a look at an hourly chart on the S&P 500. We look at any tweets that we had overnight. Then we go to the recap. And that's where Michael meticulously goes over every single trade from the live trading room. Now, I mentioned yesterday that it was a difficult day in the live trading room, that I wasn't even sure if Michael got his 2 points. Turns out he did, but he really had to work for it, okay? Today was the opposite. I think it was one trade in just a couple minutes, and we hit our daily goal. Now, because we're committed to teaching and training for 2 full hours, once we get those 2 points, we keep trading, okay? And some days you can see us trade ourselves right into a hole. Most days we end up positive, but it shows you why it's a good idea to consider having a daily goal, whether it's 1 point or 2 points or 3 points, something that is definable, measurable, and doable, so that you wake up with a goal in mind, a target, if you will, and then once you reach it, you can feel some sense of personal satisfaction. That's so important to the human psyche. Think about it. See if you can't put that to work in your trading. So yesterday, Michael had to work really hard to get those 2 points. Today, 1 shot, 1 kill. Boom. It was done. But yet he kept trading. All right? So we're going to go to the recap in just a bit. And because Mike's on vacation, what he does is each morning, even though he's on vacation, he's still in the live trading room trading. He takes the first 10-15 minutes and creates a video recap of the previous day. Normally he comes on and does it live. So today you'll be watching a video recap of what happened in the trading room yesterday. So today on the recap, you're going to be able to see the struggle of yesterday, the one I was talking about. And then tomorrow you'll see the video of today when, boom, he just nailed it. 1 trade, couple minutes, done. All right? Now, if you're new to this audience, you're going, well, 2 points, that's no big deal. No, I beg to differ. It's a very big deal. 2 points is all the money you ever need to make. I'll say that again. 2 points is all the money you ever need to make. That's a dynamic of the markets that many folks don't understand. They think, many people think, you might think, that in order to make more money, you need to make more points. No. What you need to do is you need to learn to take some number of points out of the market, and I'll let you define that number of points, okay, whatever's comfortable for you, depending upon the market that you trade in. And once you become comfortably consistent at obtaining those points on a daily basis, all you have to do is use money you earn in the market, not money from Aunt Ida, not money from your 401k, but money you earn in the market to increase the number of contracts you trade. If you're trading the S&P 500, the intraday margin with our broker, Daniel's Trading, is $500 per contract to trade the S&P 500. And what we teach our students is, number one, you stay in that simulator until you're consistently profitable. Once you've passed that test, you go live with one contract, you earn $1,000 in the market, and then you add one contract. But you said it only takes $500 to trade one contract. That's right. That's why we want you to earn $1,000, okay? Because you could have a couple bad days. It could happen. That could just be the reality of trading. So you earn $1,000, you add a contract, now you're trading two. Okay? You've just doubled your income stream. From 1 to 2 doubles your paycheck. Now you might go, well, okay, 2 contracts. All right, let's see. That's $200 a day. I still can't live on that. Okay. But what you can do is you can make another $1,000, and if things go well, it could happen in just 5 days, and now you find yourself trading 3. Before long, you could be at 5, you could be at 10. All right? Now, by the time you get to 10, you're talking about some pretty serious money with just 2 points a day. Now, this is a pendulum that swings both ways. Trading is risky. It's not suitable for everyone. You can lose all of your money and then some. Never forget that. That's just not some governmental warning. That's the truth, okay? That is why in the live trading room, you will see us teaching you aggressive risk management. I know that a lot of people watch Mike in the morning and go, man, that guy moves his stop loss to break even so quick. It's no wonder he gets stopped out all the time. Good for you. You're onto our secret for success. If we get stopped out at break even plus a tick 10 times in a row, so what? All we need to do is catch that one runner, okay? And that makes our day. Sometimes it happens in the first trade, and sometimes it's the 5th or 6th trade. Either way, that's okay. All you need to do is learn to be consistently comfortable taking your 2 points. And when I say your 2 points, you may have decided 1 point's enough. We have partners, and I know other people. Their goal is just 1 point a day. Do the math. If you're trading 20 contracts and you take 1 point out of the market, just one, how much money is that? Is that enough for you to live on? I think it probably is. Now, don't be foolish. Don't be foolhardy and go, well, you know what? I've already got enough money in my savings. I could just fire up an account and start trading 20 contracts tomorrow. I don't need to go through all that, you know, simulated trading, paper trading, you know, trade 1, then trade 2. Oh, that's foolish. I'm a smart guy. I built a huge business, you know. I'm not the average person. I don't have to go through all that. I'm just going to open an account. I'm going to trade 20, get 1 point, and live my life. Please, 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 don't go down that path. I've seen it happen to too many people, too many times. It won't end well. Let me just say, I don't know I do not know one person that ended well for. Not one. And quite frankly, I know a lot of people, all right? I know a lot of traders. I talk to them every day, by phone, by email, by Skype, whatever. I talk to people. I don't know. Now, don't you think there'd be at least one that it ended well for? After 8 years of being on the radio, dealing with trading, dealing with traders, don't you think there'd be at least one? You're going to be that rare anomaly, that 1 out of 8 years. Okay, I can't stop you from doing it. I can only beseech ye, my brethren, don't do it. Do the right thing. No matter how much money. If you got $1 kajillion, that's okay. Put $5 grand in a trading account, maybe 10, and then go trade in the simulator until you're consistently profitable. Then go live with 1, and after you've made $1 grand, go to 2. After you've made another $1 grand, go to 3. And then if you hit a bad run, okay, there's no shame. It's not emasculating to step back into the simulator if you need to regain your footing and regain your bearing. It's okay. That's what a smart trader does. A gambling fool will just keep going. All right? Who do you want to be? I think you want to be the smart trader, right? So let's do the right thing. All right, as I've talked, bottom fell out of the market, looks like. Yikes. Well, we'll talk about that. And we'll talk about all of this. The old zone, the zone, the zone. Am I showing you, wait, am I showing you yesterday's screen? Gee, no. This was yesterday. Zone, the zone, the zone, the zone. That was yesterday. Okay. Now today. Zone, the zone, the zone, the zone. Then I told you that would keep happening. That price would keep going from zone to zone to zone until when? Until it didn't, right? There you go. So where's price headed now? Simple. It's headed down to the next weekly trading zone. That's where it's going. We'll talk more about that in a minute. We need to get to our good word of the day, get to the recap, and then after all that, we're going out to Las Vegas, Nevada to talk to David Williams from PageTrader.com and also Miss Robin Dane, the trading coach. So, our question, is war ever right? That's answered in 1 Timothy 6:12. And here's what it says. Fight the good fight of faith. 1 Timothy 6:12. William Tecumseh Sherman. I've been wrestling over whether I was going to try to say that out loud. Tecumseh. William Tecumseh Sherman said, war is hell. A pastor friend said to me, war is not hell. Hell is a place where certain people deserve to be. But war is a place where innocent women and children are killed. And they don't deserve that. No doubt, war is horrible. We see more and more of it every day, and it's something no sane person ever wants. Yet many people are asking, is war ever right? I want you to think about that. Is it? Jesus teaches us to love our enemies and to seek to be peacemakers. Certainly, every Christian should. God's Word teaches that God has ordained government to administer justice, to defend and protect the citizens, and to punish evil. So how do we reconcile what seems to be contradictory teaching in God's Word? Jesus teaches us about the attitude of the individual, and later in God's Word, we learn about the role of government. So friends, I encourage you, let us pray for our government leaders, for our military personnel, as well as for those of our allies, to protect and defend its citizens, to administer justice, and to punish evil effectively. That's our good word for the day. You know, it's so easy to complain about government and who's in office. We elected them, and you're quick to go, no, I didn't vote for those people, whoever they might be. I voted for the other team. But we as a group, the American people, cast a vote, and this is the outcome. like it or not, it's biblical that we pray for them. You know, the easy way out is to poke fun at them, call them names, and we do that. It's human nature. You know, I'm not getting on anybody's case. I do it myself. I complain about our current administration and some of the foolish things they do and some of the unbiblical things they do. But the Word doesn't instruct me to criticize them. It says I should pray for them. It doesn't say pray for them if you agree with them. It doesn't say pray for them if you think they're doing the right thing. It just says pray for them. So that's what I'm called to do. So the next time I open my mouth to criticize, I pray that by the power of the Holy Spirit, that my criticism will be turned to words of prayer. And it does say that you should also love your enemy. That's a tough one. Try living that out. It's hard. But it is what we're called to do. Okay, with that said, let me go back to this chart just real quick. Then we're going to jump over to the recap. I won't be able to get through the entire recap today because we'll be short on time. I will play the balance of the recap at the end of the show. Now, we've been, you know, I've taken off last week's trading zones, but last week we had a zone here and price had gone from zone to zone to zone to zone. We went over that in depth yesterday. And now this week, okay, the 21st was Sunday night, right here. This is the Globex Open. We've gone from the zone to 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 the zone. Now, these zones, if you're new, they go out to the partners via email before the market opens every Monday. And once they're published, we don't alter them or edit them or adjust them in any way. That's it. They're carved in stone for the entire week. Now, the distance between the zones from 86 up to 94, that would be 8 points. Okay, so you've got an 8-point just from the inside to the inside. You got 8 points. So 8, 16, 24, 32, 40, 48. I get that right? 1, 2, 3, 4, 5, 6. 6 times 8 is 48. Yeah, okay. So 48 points back and forth. Am I saying that you just sell this and buy this, and sell this and buy this? No. Could you? Yeah. Do we have people that do that? Yeah. Is it the best way to take advantage of the zones? I would say using your slingshot, as I explained in depth yesterday, using our slingshot to pick your entry on the way down and on the way back up. You're best served using the slingshot so that you never have to risk more than 8 ticks. Now, in this instance, if you had sold here with an 8-tick risk, you would have been fine all the way down and not got stopped out. You could have bought this with an 8-tick risk and been fine all the way back up. Same thing all the way back down and back up. You see, this is, don't get lulled into a false sense of complacency. This is really a picture-perfect kind of thing. We did have a tweet the other night that said to consider being short right here below 1690. That got erased. Oh, there it is. 1693. I didn't put any tweets out last night, in part because of an email I got, which was thanking me for the tweets, and partially because of this stuffed up head. Yeah, I'll maybe talk about that a little more in the after show if I feel up to it. So I didn't put any tweets out last night, but I didn't need to because the same thing was in play. We'd already done zone to zone, zone to zone, and then we caught this tweet that took us down to the zone. And then yesterday during the show, we looked at this trade and how we would get into this trade on the way back up. Now, on the way down, I haven't looked at that move this morning. I don't know if the slingshot afforded us an entry on the downside this morning. I'll take a look at it during the recap video, and if it did, I'll point it out and show it to you. Okay. So with all that, let's jump on over to the recap. I got to switch out. Oh, I forgot to do this. Hang on. In my rush to get things up and running, I forgot one of the semi-important steps. Let's try it again. There we go. There's a soundboard. There's audio.
Is Wednesday, the 24th of July, 2013. I am going to do a recap of the morning of Tuesday, July 23rd. July 23rd, 2013. All right, the results for Tuesday. Let me bring up the spreadsheet. The results for Tuesday were, let me slide this over, +7 on soybeans, +5 on the Russell, -20 on crude oil, +17 on gold, and +4 on copper. Okay. +4 on copper. It took us about 100 minutes and 21 trades to get to our 2 points yesterday. And we had 23 trades in all. So far on the month of July, we are up $3,975 per contract. That's $39.75 per contract for the month of July. All right, now let's go through these trades that we took. Look, this one stopped me out to the tick this morning. I got long right there, stopped me out right there, and then did what it was supposed to do. All right. Let's go over the trades. Now, let me start out with soybeans yesterday. Okay, I'm just going by the stuff on my list here. We'll start out with soybeans from yesterday. All right, these were the trades. Our first trade on soybeans, we had a bearish cross, a pullback up here, and we had a down close below the trend line with bearish divergence. We entered that trade and we took some profit on that trade. It looks like we took 4 ticks profit on that trade. We had another scenario right here, same thing. We had a trend line. We got a down close below the trend line right there. Apparently we missed this one right in here. Down close below the trend line right in there. We missed that. I think the reason we didn't take that is because we didn't put a lower swing in. Okay, so we missed that. And we got this one where we got the down close here. That gave us 4 more ticks, so we were +8 at that time, I think. And then we stopped out on this one right here, which was a long trade off the BPC. Stopped us out for -8, so we're break even. And then we took a couple more trades over here. One of them, I believe, was 4 ticks, and the other one was 3 ticks. So we ended up +7 on the soybeans yesterday. Okay, +7. Now I just want to point out, after we finished up in the morning session, there was another long trade right here. We were looking for this trade to get up to this level right here, and it got right up there, and then it turned around right off at that level. There was some beautiful trades right here. The down close right there was a short opportunity. The down close right here was a short opportunity. And the down close right over here was a short opportunity. This was a huge move down on the soybeans yesterday. It's 81 all the way down to 65, 15-cent move, which is a 16-cent move, sorry, which is the equivalent of 16 ES points. And it kept going. There were There are a ton of opportunities on the soybeans yesterday. But I have a lot to go through for yesterday. So for July 23rd. So I'm going to jump to the next market right now. Okay, currently the soybeans are not really moving around all that much. So I'm going to jump over to, let's do gold. All right, we just had a trade on gold here in the pre-market. We got long right there, it's south to south right there, and then it moved up to exactly what we thought it was going to do. It's coming together right now for another possible trade. All right. Notice the brown line right here. Okay. What we need is an up close above this trend line right now. Okay, I'm going to go through the trades from yesterday. You guys can watch for that up close on your own charts. You can see in here in the pre-market this morning there were plenty of opportunities there, there. Still looking right here, right here. And then on the long side, it was the one we just took that's south to south of the tick and went up. I would look for, yeah, this is a pretty big resistance area right here. I wouldn't look for price to get through that right now. I would look for price to keep going down probably. It should get down through this level right down here at 33.7. If Dwayne were going to put on a tweet, he would say something like, look for gold to get either above there or below there. So look for that. Okay. Now back to yesterday. We had a bunch of trades on gold yesterday. Look at them all. My charts are littered with gold trades. All right, our very first trade was right here on the down close below the trend line. We ended up taking a break even on that trade. The next trade was over here. We took a long right in here. We got some profit on that. The next trade was right in here, a long trade above the trend line. This was a long trade off the BBC with bullish divergence in the blue cycle. The next trade was a long trade above the trend line, the close above the trend line. All right, we took a long there. We ended up taking next to nothing on it, probably one tick or no ticks. The next trade was up here. We took some profit on that one. The next trade was right there. It looks like we took a tick on that one. The next trade was down here. It was a short trade. Looks like we got a break even on that. Over here, it looks like another break even and then some profit on that trade. All right. We missed something in here. We missed a trade right there. And it seemed like a lot easier. Oh, crude oil's one the majority of the trades. Well, that's what we did on gold yesterday. We ended up plus 17 ticks on gold. All right, plus 17 ticks. Doesn't look like we missed too many trades in here yesterday. Yeah, we ended plus 17 ticks. Now you can see as the afternoon went on, there were plenty of opportunities in here with bullish divergence and opportunities to get long on gold. All right. Later on in the afternoon, there's opportunities to get short on gold. And then in the evening, there were trading opportunities as well. All right. That was our day on gold. Now, let's jump back in here to the current time. We needed an up close above the trend line. We got the up close right here. Now, this isn't the optimal type trade setup because the cycle is headed down against us right here. There's still some bullish divergence, but there's not a lot of it. It's okay. It's not great. You know, if we surround this thing with a box like that, you're in a box. So given the current position, the current price, you could jump into this thing right here, try to get in the middle of that box at 36.7. And that's, you know, with the cycle headed down like it is, I don't really like the trade right here. All right. I think it's probably going to work its way down, but it is a valid trade setup from right there. Okay, right there. That up close right there. All right, I'm gonna slide gold off and jump onto crude. The soybeans are moving even now. Speaking of crude, guys, we have crude inventories today at 10:30 Eastern. All right, let's look at the bigger picture here on the soybeans. Wow. Yeah, there's a lot of room down here on the soybeans. It should get all the way down here. All right, I'm going to drag this line. I'll drag this one way up here. On the downside, that's where we should get. Okay. I'll make it a different color. Okay. On the downside, that's where the soybeans should get. We don't have any valid trade setups there on the beans right now, but that's where we should go. Okay. Let's see, on the gold, I put in those lines at 37.9 and 33.5 for gold to get to and buy one of those. All right, I want to do crude oil. This is crude from yesterday. The crude trades from July 23rd. Well, give us just a moment. Let's look at what we have right now. Okay, we don't have anything right now. Nothing at the moment. All right, now we had a bunch of crude trades too. Crude beat me up pretty bad yesterday. What I mean by that is I took this first losing trade here. This was a valid trade. I took that one and I lost. I took this one. This one was a mistake. I lost. And then I followed up with this one, which I lost. So I had two losing trades in a row that were valid and one that was not valid. That put me down 24 ticks on crude. Right over here on this move, I got back to minus 12 ticks. I think I took 8 ticks profit on that. Then I gave it right back here. All right. Actually, I think I took 10 ticks profit, and then I gave 8 ticks back here. Something like that, or 12 ticks profit. Yeah, that's what it was. I took 12 ticks profit on this. That got me to minus 12. And then I gave 8 back right here. That got me to minus 20. I ended up with the break-even trade there and there. I missed a winning trade here and here. And that was pretty much it on the crude for me yesterday. I ended the morning at minus 20 on crude, which is unusual for me, but crude is still my biggest winner of the month so far. Okay, crude is still the biggest winner of the month so far. Now, that gold trade, I told you I didn't like the gold, and I thought the gold was going to continue going down, not up. It is going down. All right. See, now the cycle is all the way down here at the bottom, so I would start looking for some bearish divergence. Okay, look for some bearish divergence on gold and an opportunity to short it. Where did I draw that line? 33.5. Okay, that's where I think gold is going. I think it's going at least to 33.5. All right, on crude oil, that was where we were on crude yesterday. All right, those were all of our trades on crude, and it was not a pretty day for us on crude oil yesterday. The day before, we were up 55 ticks on crude. Yesterday, we were down 20. So, you know, it happens. Let's see, the next market was the Russell. Now, the Russell yesterday were the soybeans. Okay, the soybeans, I think the soybeans are in a kind of a free fall here on the way down. When the markets open up here at, in an hour or so, when the markets open up, I think we're going to see a lot more activity here on the soybeans, possibly to the downside. Hopefully we'll get a pullback and an opportunity to get into a trade. Okay, get some divergence and get into a trade, but we don't have it right now. All right. Now, on the Russell yesterday, let's see. All right, we missed this first trade here on the Russell, and we grabbed the second one. I think we took one tick profit on that one. We missed this one, which would have stopped us out. We got a break even on this trade. We took some profit on this one. I think we took 4 ticks profit on this. Is that right? Yeah, 4 ticks profit on this one, I think. That was pretty much about what we did with Russell. I mean, the real shame was missing this first one right here. That was a nice trade right there. And there was no reason not to take it. But for some reason, I must have been doing something else at the time. Crude oil just sort of collapsed, and gold is pulling back, giving us an opportunity for a short here, guys. Okay, we're testing the BBC. We just need a down close as long as the cycle is still red. We just need a down close. Okay, and the crude oil actually just gave us a short trade that I missed. We still just need a down close. Down close right here at 36.2. 36.2 would be okay. Over here on the crude, we just had a short trade, right? Actually, it was right over here at 106.62. All right. Short the gold, but I got in at 36.1. 36.1. Okay. Now, I do think the gold is going to go down to, where's that line? 33.5. 33.5 is where I think it's going. We put in a lower swing over here on the crude oil, so we can do this. All right, we can draw a trend line and trade it again. Come on, gold, get down there. All right. So I covered the Russell trades. I covered the crude trades. The only thing I didn't cover yet is copper from yesterday. Okay. Gold is starting to move down right now, guys. It's starting its move down. Stopped break even. And here it is. Here's the gold starting to move down. 33.5 is where I think that's going. Okay. I don't know if it's going to go straight down there, but I don't have any risk on the trade anymore. All right, I'm going to put the Russell back over here where it belongs. Crude oil is pulling back up and testing the BBC right now. Crude is testing the BBC. Watch the cycle here. The cycle is going to turn blue on the close of this bar. So we're going to need a down close below the trend line. Okay. And gold is now down to 35.7. Okay. Copper's actually got a short trade set up right here too. The down close on the current bar on copper would be a short trade too. All right, this didn't exactly hit the BBC right up there. So actually, this probably wouldn't even be a short trade. Would it? 21.85 down to 21.65 would be right at the trend line.
All right, guys, we're going to pause right there, and I will, at the end of the broadcast today, I will finish up that recap. Also, the recaps are available in their entirety by going to, well, number one, our website, and number two, you can just go out to our YouTube channel, okay, which we have 2 YouTube channels. Let me get this all switched around. Bring my charts home. There we go. Okay. All one last thing over here. We do that. So I can do that. And now I've done that. And all is well. Okay. All right. We have two YouTube channels, youtube.com/Emini Futures Trading. I'll put these links, as we're talking with David, I'll put all these different links I've mentioned, I'll put them into the chat box. You can copy and paste them into your browser window and bookmark them if you like. Now, let me open up a new window here in Google. If you're going to our website, cfrn.net, if you look on the right-hand side of the page, View Live Trading Room Results. If you click that, this goes back to August of 2011, and we've actually made a 20 to 30-minute video each and every trading day. A couple days we weren't open, a couple days the video, see, once we record it, then it has to go through a process before it can be uploaded, and there's been a couple times that the process fails, but 97% of them are there. And if it's a bad day where it failed to convert, then we recap it again in the next day, just because we don't ever want to be in the position of, oh, well, that was a bad day, so you didn't post that video. No, the bad days are posted. Okay? The days where we struggle to get the 2 points, even the days where, and there's been, I think, 3 or 4 days this year maybe, that we didn't get our 2 points in the first 2 hours. Now, keep in mind, our ability to not get our 2 points on those days is hampered by the fact that it's only 2 hours. And so when you watch each one of these videos, you have to keep that in mind. Everything you see on these videos was done in 20 minutes. Okay. So once you watch, let's see, we're current on this page up through Monday the 22nd, and we'll get the 23rd and the 24th, but you can just go edit, you know, I don't know why you would want to, but you could. You could go to YouTube, and if you go to youtube.com/Emini Futures Trading, this is where you'll find all the recap videos, okay, and some indicator videos. And if you're a first-time visitor to CFRN, this is a great place to start, just to kind of get your bearing, you know, who we are, what we do, what we're about, all of that. And then under recent uploads, okay, like right here today, 7/23. So that's the recap for yesterday, because today's the 20th. The recap you were just watching, it's out there on YouTube right now. Okay. Now, our other YouTube channel is very easy to remember, youtube.com/CFRN. Okay. And there under recent uploads, you'll see I've started of late doing a video of the radio show. So in other words, I mean, for 8 years people have been able to go and listen to the podcast of the radio show. We have a very popular podcast in the iTunes store. But now we also have added the dimension of video. So you can still listen to the podcast just like you always have, but if you're at your desk or in your recliner with your tablet, not driving, all right, you can come here, click this, and yesterday the radio show ran 3 hours. Well, this wasn't yesterday. This was the 16th. I'm a little behind getting these posted because it takes a while. On the 16th, there's a 3-hour video you can watch. It's the entire radio show. And then on July 15th, it was 3 hours and 15 minutes. And then on July 12th, we had a light day, only 2 hours and 44 minutes. And then there's a bunch of other just videos that I've made over the last few years. Simple Emini Futures Trading, Learn to Trade Emini Futures. You know, subscribe to our channel. That way, whenever I do, because you never know when it's going to strike me to make a video. And I probably won't even bring it up on the show. I just post it out here. But if you're subscribed, whenever I post a new video, sometimes at night I'm working and I get hit with some inspiration and I want to share something. I got nobody to talk to, so I make a video. Then I'm talking to everybody. And so if you go here, you'll find all of that stuff. And there's quite a few of them going back several years. So youtube.com/emini futures trading, youtube.com/CFRN. Now also on Facebook, you can follow us. We are Emini Futures Trading on Facebook. Okay, I'll put this link in the chat. I'm going to put a lot of links in the chat box for you here in just a few minutes. Okay, and this is where I start everything. Like if I'm going to send out a tweet, like the tweet I sent out the other. We had three great tweets Monday night, I guess it was. We had a beautiful S&P E-mini futures tweet that did the deal. We had a really beautiful soybean tweet that did the deal. And we had a beautiful bond tweet that did the deal. And they're all listed here. Now, I put them here first. Facebook then goes and tweets it on my behalf. And then I manually put it into our Seeking Alpha page, our Stock Twits page, and then it goes just kind of viral across the net, a lot of different places. So follow one of them. Facebook's a great one because, see, on the what happens is when it goes over to Twitter, it truncates it. And let me explain what I mean by that. Truncate's a fancy word for shorten. Figures they would use a big word to define shorten, right? Let me show you what I mean. See, like right here. See where it's got that little link on the bonds? Twitter, as I'm sure you know, limits you to 140 characters. You can only say so much in 140 characters. I used to spend a lot of time and energy trying to be really creative to squeeze my thoughts into 140 characters. And I thought, you know, that's just crazy. So by putting it on Facebook, I can be as eloquent as I want. I can wax on and on and on. You know, I can put all this. It goes over and tweets it and reduces it to this and includes the link that then takes you to the full text of what it is I'm trying to convey. So, you know, follow us in all those places if you want. That'd be great. Give us a thumbs up or a like or whatever that service offers. We appreciate it. Okay. Now, I asked a question earlier because I didn't know, because I wasn't here. I was away from my desk this morning during the live trading room. I said, on this move down, did the slingshot actually afford us an opportunity to get in this trade? Because it looks like it happened pretty quickly. But this was the final leg of the zone to zone to zone. Remember, zone to zone to zone to zone to zone to zone. Okay? Was there an entry here? Let me shrink this up so you can see it all in one screen. Okay. There we go. All right. Here's price coming down off of that zone at 94.95. We get our bearish cross. That's step one. Step two, got to have the pull away. Step three, got to have the pull back. Okay, we got three things. Step four, we got to check to see if we have bearish divergence. The answer is yes, we have bearish divergence. Okay. All right. Step five, we need a close below the trend line. Why below the trend line? Because this changed color. If it had stayed red, we wouldn't need a trend line. We would just need a down close. What's a down close? It's a red candle. Okay. Up close, green candle. In other words, once we touch, so if this had stayed red, we would have been able to enter on this candle right here on the close of that candle. But because this changed color, we now need a little more confirmation that price really is headed in the direction that we want to trade in. So we draw this little trend line, and then we enter on the close below the trend line. Okay? So instead of entering on this candle, we're forced to enter on this candle. Now this candle, the open of this candle, is 1687. Everything is good to go. There's only one problem. From 1687 down to the zone, there's only 1 point of room to run. Everything else, picture perfect. We don't trade into a zone. We'll trade coming out of a zone, like up here. See, we'll trade coming out of a zone. But coming into it, because we have to expect that that zone is going to be support like it was there. Okay, the way it has been all the way across. Let me show you. I'll show you on the hourly. See, it was support here. It was support here. And we have to anticipate that it's going to be support until it's proven not to be. Now, will that occasionally cost you a trade? It will, okay? But we know that this isn't going to hold forever. I talked about this yesterday. How long will this keep pinging from zone to zone to zone? How long will it keep doing that? Until it doesn't, okay? So as it's coming down and we have this beautiful trade set up, all the pieces are in place. Except we don't have 2 points room to run before we hit the zone. So even though this cost us a trade, if you want to look at it that way, that's okay. It helped us to maintain our high probability criteria that we employ for each and every trade. You start breaking the rules, you start bending them, and pretty soon you don't have a high probability setup anymore. Now, because it's a high probability setup, does that mean it's always going to be correct? No. It just means that a percentage of the time it will be parallel to the market as opposed to running the other way. Trying to avoid using right and wrong. I don't like those terms as they are applied to trading. Because if you follow your plan, your trading plan, it doesn't have to be our 5-step plan, doesn't have to be your plan. You may have something totally different. But as long as you follow all the rules, just because the trade's not profitable, that doesn't make you wrong. Okay, you need to get that out of your vocabulary. Sometimes the market will do something other than what we anticipated it doing. Sometimes it will run contrary to our trade. Okay? That's trading. Forget trying to find that one thing, that time frame, indicator, oscillator, whatever, that's going to prevent you from ever again knowing the pain of being stopped out. It doesn't exist. And there's less pain in being stopped out than there is being caught up in this never-ending hunt for the thing that doesn't exist. I mean, let's face it, we would all crawl on our hands and knees across broken glass in the desert in Arizona in July to get to that thing if it really existed. And if you go look at a lot of web pages out there, you'd think it exists. I'm here to tell you it doesn't. If you read my last blog post, I give you scientific proof and evidence as to why it doesn't exist, why it can't exist. It's impossible. I challenge anyone to prove me different. It's impossible to know the future. Why? Because it hasn't happened yet. Now, high probability, what does that mean? Well, it means that you anticipate what's going to happen next, and you nail it more times than you don't nail it out of 10. Okay? That's different than knowing the future. It's not given to any man to know the future. Now, I know there's cases, extraordinary cases of people like Edgar Casey who took a nap and, read people's mail, and I don't have an explanation for that. And I don't deny his ability to do that because it's too well documented. Okay? He also didn't use it for financial gain. I don't know if that would have had any effect on his abilities or not. I don't know. I don't know. So, let's move on. So, this trade, even though it went the distance, it gave up 2 points. We're not going to lay around and lick our wounds because it's not hygienic. because we didn't get into this trade. It's just one that we didn't get into. Okay. Now, if you were trading it the other way, if you were just selling it, or as I've been talking with some of the guys about, there's an art to selling the cross itself. This is the place of power. This is where the bears officially took control of the ball right here. We know where it was to the tick. Can that be traded? It can. Is it dangerous? It can be. Do you need a special skill set to do that? You do. I'll leave that at that. Okay? And so where are we now? Oh my goodness, it's 5 after. I got to go to Vegas. All right. I thought I still had time. All right. Stand by. We're going to Vegas. Don't touch your radio dial. You know the drill. We'll be right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too.
Good morning, Dwayne.
Hey, David. Good morning. Welcome to the show.
Thank you very much.
I don't see
know if-
Robin in the audience. Did she
Okay.
say she was going to be out today?
You know, I don't think I know if she's going to be.
I don't recall. She may have. She may have told me in an email a week ago, and I forgot. So, Robin, if you're having trouble getting in, because yesterday she had problems getting logged in. So I guess if you're having troubles getting logged in, you can't hear me. So, but if you can hear me, give me a call, and I'll try to help you figure out how to get in. Okay. So, David, how are you?
I'm doing good. We're having. I know we talk a lot about weather, but when the weather is really hot, it's nice to see, and we do have it right now, a very sort of mild result from the storm that we talked about this weekend that we got, which was really incredible. It really was probably 10 years since I've seen such a intense storm that so suddenly hit the valley here in Las Vegas. But since then, the temperatures have been relatively moderate, 100, 103, which really is substantially lower than 117. And I agree with you that hot is hot. But when you're closer to 100, it's actually livable. Also, what helps it be livable is that there's the sun isn't just cooking right on you. There's a lot of cloud cover still as a result of the storm. So it's been pretty good, honestly. It hasn't been bad. And any time you can get 2 weeks, because the weather forecast is indicating that next week will be relatively, 100 degrees and so on. That's 2 weeks that we don't have to suffer in the summertime with the really, really brutal heat. And having said that, you guys suffer more than we do with the heat. So, and I've said this before, and I'll say it again, if you know anybody, especially elderly people who are living by themselves, you might do them a great favor and pay $39 and have somebody come out and check their air conditioner and make sure that everything is working fine, because really bad, unnecessary things can happen if their air conditioner goes out in a really big hot spell. A lot of times it's a really minor thing. It's the fan locks up because it's been leaking oil for years, and the little bearings seize, and that stops the whole air conditioner from working. The compressor shuts off because it overheats, and then there's no hot air. And literally, people can die or have a stroke in those kinds of temperatures. They wake up, sweating and hot. They can't move and so on. It can be really bad. So I always tell people, if you know elderly people, help them out by getting somebody over there to double check their air conditioner and make sure that they're not going to, the likelihood of something like that happening isn't there, because it's so unnecessary. These are machines. We know how to make them work, and everything gets strained under these types of temperatures. So anyway, so yeah, we've had cool temperatures, and it's been very nice. We'll talk about the markets in a minute here, but there's quite a bit that has gone on in other markets in spite of the fact that the S&P is somewhat quiet. And we've talked, we will talk later about the importance of this week that we have forecast as a top of this week of July 22nd. With that, we'll get to that a little bit later. But a couple of interesting things also are happening in the world. There's been, I don't want to get into anything too deep with this subject, but we are such a divided country right now over this president, over his policies. We're back to the calls of racism again with this the trial of Trayvon Martin and this terrible thing that had happened. And boy, I tell you, I guess it's cyclical like everything else is, but we're just one big divided mess in this country right now over just about every important subject that people feel is important. And I grow tired myself of hearing people jump to the racism card, to play that card in every single situation when in many cases it has absolutely nothing to do with it. Obviously, we have an African American man as president of the United States, so I don't know. I believe racism exists, but I don't know how much of it, because it took more than half the entire population to agree that this is a man that's up for the task. I don't think President Obama is up for the task. I think President Obama, my final distillation on who he is, which I've had a great deal of difficulty understanding, many have, is that he's a near genius politician. He has extremely strong intuitive abilities with political movement, with being able to create favorable political climate for himself or people around him. In short, he's a very high-level politician. But that's one skill. There's a whole set of other skills that he absolutely has made it clear he doesn't have, and that's leading. That's actually getting things done. That's not always related to politics. Everything in his mind is a political act, just in the same way that a sexual predator views everything that a child does, as an example, as a potential sexual act or come on or something like that. This president views everything that happens in the country as a means to an end politically. That's all he does. His whole way of thinking, in my estimation, is 100% political and has really no practical side to him. And nor does he know what to do with these problems that the country has right now. That's obvious. I don't think we can argue at this point that that isn't the case. We're 5 years plus into his administration, and people can paint the picture any way you want, but this has really been a terrible time for America, and we're very divided right now over this very president. He's the dividing line right now. And America didn't get great doing what we're doing now, which is building up enormous, unbelievable, unsustainable debt, and doing it all the while that half the population doesn't seem to care at all. Seems just fine to them. I don't know what we're getting for our money. What is the great return on being $6 trillion in debt? Remember when you were young and your parents said, well, you said, well, I want to buy this thing, it's $39. And their first question is, what are you getting for $39? You're a 12-year-old kid, and you have to explain what it is and why you want it. What are we getting for the $16 trillion in debt that we are, and the 20 that it's going to be? I don't know that anybody can answer that question. What are we getting? What are we buying? What exactly are we doing with that money that we have? What is the return on that money? I don't know. I really don't. I hope somebody can explain to me what the return is, because the simple question, I'd love to ask him, what are we getting for this? I'd just love to hear his answer. I can assure you it would be political. But that's my final distillation at this point. He's a political genius. He views everything in political light. He sees every event as a means to a political end, and he doesn't really know what to do with these problems other than politicize them. And that's a big part of why the country is where we are and why we don't sense that we have real leadership in Washington. We have a bunch of scandals underway, and we're really not going anywhere. His health care program, as you know, which is another big dividing point for people, the people that have supported the Teamsters unions, which supported him by donating $400 million, which is a huge, huge amount of money. It has now got 1.4 million signatures telling him they don't want anything to do with his health care. I don't know what they were thinking when they signed on and when they were backing him. Did they not think it all the way through to realize that the very complaint that so many people had about Walmart, which was that they purposely were not allowing people to work 40 hours so they wouldn't have to purchase insurance for their employees, and those employees would then go to the state and use the state reserves for insurance? That's what's happening now in every business that has more than 50 employees. So welcome to the new Walmart. It's your whole country. That's what's happening. And apparently the Teamsters unions just figured that out. And they're saying that the new work week is going to be a 30-hour work week because no one is going to pay what the costs are for insuring these people. So we went from one company that was just pilloried, or whatever the word is, which is Walmart, whatever you think and feel about them, to the entire country now being in a position, all businesses that have 50 or more employees are going to be doing that, including all the unions. So it's just a complete mess, this whole business. And this goes back, and then we'll get on to another subject. This goes back to the whole business of people who don't have to live under the rules that they write for others. And that's exactly what we have going on in the government now. A bunch of people who don't have to live under these rules are dictating to others that they do. And they have no way of knowing, no intelligence to be able to say, this wouldn't work. This may be his best work, and that would be a real sign of how completely removed he is and his advisors from the real world. The fact that his own biggest supporting unions have written him letters and got 1.4 million signatures saying, we want nothing to do with this thing at all. So there you are. It's my little input for the day.
So how you doing?
Mm-hmm. I'm doing pretty good, actually, because I got through that without my blood pressure going through the roof.
Oh, that's pretty good.
That's pretty good. There's 22 million people that are either unemployed right now or underemployed 5.5 years now into this recession. That's an awful lot of people. And about 60% of the population right now disapproves of how the economy is being handled. He's going to go out and give a bunch of speeches that you watch are going to simply be him going around the country, again, politicizing instead of fixing. He's going to give a bunch of speeches about why it's not his fault and how hard he's tried to make it all work, but someone else is to blame. That's what you're about to see. And that is politicizing rather than solving. That's why we're not getting anywhere, is because he cannot view the real world in any way other than political. There are no practical solutions for him. There are only political positions. That's my final distillation on who this guy is and why we have so many problems with him and why it seems so odd that he takes certain left turns when you're sure he's going to turn right, certain right turns when you're sure he's going to turn left, is because he's not seeing the world the same way we do. He sees it through the politicization of keeping himself and his minions in power, and it's all political. It does not ever come down to the bottom line. Go ahead.
I said there is a presidential speech going on right now.
Mm-hmm.
I don't know if were you aware of that? Or?
No, I know there's a bunch of them going. I didn't know about the one right now, but he's going to be giving a whole slew of them because he knows that the polls are leaning against him with the health care. He knows the polls are leaning against him with the economy, and he needs to go out and blame other people. Again, it's not to solve the problem. It's not practical solutions. It's not let's get down to work and actually do something. It's more politicization of, it's the process of politicization of this problem. He has no concern over fixing it. He's just politicizing it. And that's what he's been doing for 5.5 years, and that's why we have 22 million people out of work or unemployed or underemployed, and so on. America is a great enough country to overcome Barack Obama, but we will have to sit through another few years of him not solving problems but simply turning them into political gains for himself and his minions. What we need in office is somebody who actually understands the problems and how to solve them, and he clearly doesn't. And those are just facts. If he knew, he would have solved it already. It's just that simple. We would have been on the road to solving it already. So, careful with your health care. Oh, you can keep it. You like your doctor? You can keep your doctor. Well, that didn't work out so well. So, anyway.
Well, healthcare really is a huge issue because of the baby boomers are all reaching that age in life where you may have been, maybe you're that blessed person who, were healthy your whole life, and maybe you didn't even do anything special. You just, they call it good genes or whatever, and you just, maybe you had an occasional cold. Maybe you're that rare individual that hardly ever even got a cold. But once you hit a certain age, and that's different, I guess, for different people, but this old body, it's biblical. It was designed to run for X amount of years here on planet Earth. It starts to deteriorate and degenerate, and you need to go see a doctor. And with the bulk of our population, I don't know how the percentages are skewed right now, but I think we have more people approaching Social Security age than we do people approaching the age of going to work and beginning their careers on the job. If somebody out there knows those actual percentages or wants to Google them up, it'd be interesting to take a look at that. But yeah, this is a very important issue because of the economics of healthcare and that it's extremely expensive. If you don't have good insurance or the money, a lot of people sit around sick because they cannot afford health care. They don't qualify for free health care or government-sponsored health care. They don't make enough money to pay for health care. And my wife has been having a problem with one of her eyes, and so she has to see a specialist. And basically, at this point, the specialist just looks at her eye and gives her some kind of a high-powered eye drop, like some kind of a steroid kind of a thing. But we went out for her, I guess, monthly checkup or whatever it is a couple days ago, and the doctor spent like less than 5 minutes using this little headset she wears to look into my wife's eye and says, "How does it feel?" And I said, "Well, it bothers me a little bit, but not bad." And the doctor goes, "You're still using the drops?" My wife says, "Yeah." And she goes, "Okay, I'll see you in a month." Okay. On the way out the door, I had to fork over $75. I realized that the office the doctor's in is not cheap to rent. Her education to, number one, become a doctor, and then on top of that, to become a specialist, I realized that didn't come cheap. So I'm not faulting the doctor that she has to charge $75 for 5 minutes of her time. I'm just commenting on the economics that it takes, the ordinary person in America, it takes them a number of hours at their job, whatever that might be, to earn $75. At minimum wage, and there are a lot of people, and McDonald's is under a ton of heat here lately, because they've published a handbook in conjunction with, I'll have to think, is it Citi? I don't know. I'll look it up. In fact, I've got the whole article. We'll share it one day. They've published a handbook for their employees about how they can work for McDonald's, and if they run a tight budget and do things right, not only can they live on what they make working for McDonald's, they can actually save $100 a month towards their retirement or whatever. And they're under so much fire and so much heat for, it's so ridiculous. And you won't understand how ridiculous it is until I actually read some of the points in this little propaganda pamphlet that they put out. But anyway, so somebody who's working at, say, McDonald's and making the minimum wage, whatever that is in your state, because it varies, 10 hours to go to the doctor, to sit in the chair, to have the doctor, who's very highly trained, look in your eye and go, how does it feel? Taking your drops, okay, 75 bucks, boom. So what's the alternative? Well, health insurance. Okay. Has anybody actually looked at what it costs? If you're an employee and as part of your employee benefits package, you have health care that is covered 100% by your employer, chances are you had no idea what health care costs. If you have this type of job where your employer pays half of your health care, and that's pretty common these days, you're painfully aware of how expensive health care is even when you're covered by a group plan. And woe to you, small business owner who has to actually pay for your own health insurance 100%, and also, if you cover your employees. And I used to, when I had 50 employees, I covered them and I paid half of their policy, and I was overjoyed to write that check every month because, number one, it meant that we were doing good and we had the money in the bank to write the check to pay for the health insurance. I grumbled but when I signed it, but inside I was really kind of smiling and jumping up and down. I was happy to write the check because it meant we were doing good. And the fact that I was able to provide people with health care who had never in their life before, the majority of them, except when they were in prison, had ever had health care. Didn't know what it was like to be able to walk into a doctor's office with their head held high, not have to use a fake name, to try to get, taken care of. So this is a huge, huge issue. And I feel that we have so bungled this, one of the most important issues of our time. And it has just been horribly bungled. And I'll be the first to admit, I don't have a solution that I could not make an elevator pitch for Dwayne's healthcare package. It's far too complex and complicated. So I don't know. Do you have an easy solution, David?
Well, I think there are some much easier solutions. This is the most complex legislation in the history of legislation. Nothing is more complicated than this multi-thousand page piece of garbage which is supposed to lower the health care costs. I mean, these people are incompetent. They don't live under the very rules and things they're asking others to do, and nobody read the bill. Congress didn't read the bill, and we've been through this many, many times. Now where everyone's realizing, including their most ardent supporters, how completely incompetent this bill is, how it doesn't take anything in that's real into a consideration. So in answer to your question, yes, there are many, many practical things that could be done with health care to make it very different than this plan, and different, of course, than the way it was. But I'll tell you this, the way it was, while nowhere near perfect, is a whole lot better than the crash that this health care plan is unto itself. I mean, it's not even, it's barely understandable without having a whole committee have to read sections of it and try to figure out how to put it all together. It's such a mess. Healthcare has gone up, and healthcare will continue to go up under this plan. So, yeah, it's a complicated problem, but we have the most complex piece of legislation ever put through our government, and nobody really understands it fully. The people that are beginning to understand it are running as fast as they can from it. Businesses are being forced to either lay people off or force them into less hours on the job so that the business doesn't have to pay because the business can't afford, and so on. And insurance is expensive. There's no question about it. However, there are some things that I would say. There are many people who get insurance, as an example, for the most expensive kind is the kind where every time anything happens, you go run to a doctor. Every time you have a sniffle, you go run to the doctor. That kind of insurance is about $450 a month right now for an adult. So one of the first things a person could do is he could review all the different kinds of insurance that are presently
David,
available.
if I can interject, I've not been able to find health care at that price.
What price are you finding that?
For my wife and I, I'm looking at about for the full coverage kind of a thing where you can just go to the doctor and you don't have to worry about anything, it's about $1,200 here in Arizona.
Well, that's for two people, so it's about $600 per
yeah,
person.
right,
Yeah,
exactly.
and that's partly because you have really long hair and look like somebody that was a band at one point, or maybe the
That's
roadie
true.
even, and
Yeah.
that does cost more. So
Okay.
you have to realize there are some
All right.
differences there. Your wife, on the other hand, is beautiful, and I have to say that probably kept it under $1,500.
Now, it does vary by state, and part of this healthcare thing is to take down those walls so that insurers can compete across borders. I don't know how that'll work, but I'd be interested to hear from listeners, those of you out in the audience, if you would type in what it costs you if you pay all, or if you know what your insurance costs, type in if it's a company plan or a personal plan, and then do you pay $450 a month or $600 a month for? Just tell me what you pay for one person.
Yeah, and obviously it has a difference. It relates to your age and whether or not you've been a smoker,
state,
whether or not you drink,
right,
how many times you've been to
right.
Peru. All these different things are taken into consideration because they know what happens in Peru, and that they know. I mean, they go in knowing that right off the top. Okay, oh, he's been to Peru. All right. Well, that's going to be another $38.
Well, when I quit smoking cigarettes, that significantly reduced. Well, I don't know about significantly, but it makes a big difference.
Mm-hmm.
When you quit smoking, your premium will come down, and once you've not smoked for 3 years, that really, I mean, despite the positive effects for your own health, I mean, it's actually reflected numerically on the premium you have to pay for health insurance. But go ahead.
Right. So bottom line is, whatever it is, I mean, for me, when I checked it out, it was about $450 a month. And I'm just mentioning this. This is just something for people to review. This is not an all-encompassing solution. And I think you and I both have said before, if somebody could show me the group of people that were not defrauding the government that really couldn't afford to pay it, I would be very happy to pay into a fund that helps take care of them, because I'm very compassionate towards people who don't have the ability to pay for things. And I would love for them to have health care. But our system is so hacked to pieces, and there's so much fraud and abuse, and it's part of the business plan. The fraud and abuse all gets put in there. There's so much fraud and abuse that we're all paying for that out the ear, and that's a big part of what the insurance companies are trying to cover themselves for. I'm not defending the insurance company, but either way. So let's say it's $500 a month. Let's just say for an average person. And that's for a person who goes to the doctor for every little thing. If you learn to not go to the doctor for every little thing, there's other plans that limit how many times you can go to the doctor. Their expenses much less, or in many cases 30 or 40% less. And then you can do what I've done, which is I'm on a plan that says, listen, I really am one of those people that I was lucky and I just don't have health problems my whole life. And so what I've done, and this happens to be for me, but it may be workable for someone else, is I've taken the exact opposite approach. I've said, listen, I don't mind having a big deductible like $2,500, so that if I have to go to the hospital or something, I'm going to pay up to $2,500 for medical care if I need to get it done. But anything over that, or $5,000, I forgot what the number is, then the catastrophic stuff, the stuff where you're having operations and it's $150,000, all that stuff is covered. And that plan is like $160 a month. That's affordable. So I have, in a sense, partially self-insured myself. And I know I'm not going to go to the doctor every time I have a sniffle or something, bothers me a little bit. But if I do have to go to the doctor, I'm willing on those occasions to pay out the $75 or the $200 or the $500, because I'm not going to be paying that out every single month. Now that happens to work for me, so I'm basically catastrophically insured. If something really big and bad happens to me, an alien infects me with some strange thing, and I need to go to a hospital and stay in a hospital room for 45 days, I'm covered by this insurance plan. But I think it's actually anything up to maybe $7,000 or $8,000 that I have to pay myself for hospital visits. So that means the insurance company never has to worry about me going to the doctor for sniffles, but they do have to worry if something really bad happens to me. So that's the way I handle it. But that's the extreme. That's the extreme on the one side. And the other extreme is people who just have a full policy where you can go to the doctor 4 times a day, and you're going to pay for that. You're going to pay for that. So there has to be a happy medium. Just before we even get to solving everyone's problem, there has to be a happy medium in the middle somewhere where you can limit the number of times you're going to go run to the doctor because you woke up, and don't feel exactly right. Every single time that happens, you run to the doctor. And I know people who do that.
Well, and I saw that with my employees. Before we got health insurance, most of them were healthy as could be, but once they had access to that health insurance, and for many of them, I understand it was just the fact that they could, go to the doctor. It was kind of like, wow, this is, and so I didn't ever get on their case about it. But when I saw it becoming an issue, I would talk to them and say, if everybody goes every time they get a sniffle, our premiums are going to go up, and it is going to cost us all more. And I want you to go when you're sick. And in particular, I saw it with parents who had children. And so suddenly their children had access to health care. And there's no way I could ever, try to school them on that. If your kid's sick, you go to the doctor. But I did try to school them from, a practical, not from a monetary motivated place, but just practical about being, kids who are, if you're overprotective with your kids, that's not good. Just as allowing them to play in traffic is no good. Being overprotective, hypervigilant, a helicopter mom, I think that's the term they use now, a helicopter mom or helicopter dad. We're always hovering over that kid in every area of their life. Then when they turn 18, they're not able to stand on their own 2 feet, and even though they have feet. So, yeah, I know what you're talking about. I know, and not just from an employer-employee standpoint. Just I have friends and family members who spend an awful lot of time at the doctor, and I'm not saying they aren't really sick. It's not for me to judge, but.
Well, the person has to judge it for himself, but listen, they can save some real money, some substantial savings, by just not having the Cadillac plan that just says you can go as 12 visits a month or whatever it is. I don't know what it is, but that they have to go do that. You can cut that down dramatically. As to the wider, bigger picture, again, the plan has to be laid out with practical things in mind, not everything being politicized. And this program is so politicized and has so many things, so many moving parts in it, it's not going to work. It'll probably fail under its own weight in one way or the other, and we'll have to go back to some other approach. One thing I will say is that every day in America, insurance, and this is not a defense of insurance companies, but let me say what it is. The vast majority of all the claims that people make for health care get paid by an insurance company. You go to a doctor, they pay. The vast majority of them. However, there are still abuses like the insurance company throwing the classic, this was a pre-existing condition, so we don't have to spend $250,000 giving you cancer treatment, and so on. And that has happened to people that I know, and in some cases maybe it was a pre-existing condition, but in many cases it may not be. Insurance companies are businesses, and they're going to take their shots because they want to protect how much money they pay out.
Yeah, we have a.
Go ahead.
Go ahead.
No. Yeah, I'm through.
Okay. From a healthcare professional, thanks for sharing this, Ed. As David pointed out, insurance was originally designed to address catastrophic losses, but like many things today, our health insurance has developed into a semi-entitlement program. If more people took the high deductible approach with some preventative benefits, they may do a better job of managing their own health and healthcare costs. Just my opinion, but also based on over 30 years in the healthcare industry.
Absolutely.
Now, another side of that story from another listener, we do not, and I'm guessing because of the capital letters in the response in some of the words, that this is a point. This person is really trying to make a point here. We do not go to a doctor for every little thing. My wife has a chronic disease, and she has to go to the doctor for her not so little thing, and she has to go often. There is no happy median in many people's situations.
That may well be true. That may well be true.
And I understand that completely, and my heart goes out to you and to your wife. And it kind of ties into my whole thing about it's biblical that he who does not work shall not eat. But we know that in this world there are people who can't work because of sickness. It can be physical health, mental health. There could be a number of issues that prevent a person from working, and that's where I'm all for every type of possible services and help that we as taxpayers and as human beings, as brothers and sisters in this world, can help one another. I'm all for that. What we've spoken out about is perhaps those who would take advantage of the system. And in your situation, with you and your wife, I don't know if you pay your own health care cost or if it's in some way paid, whether it's Medicare or Medicaid or something other. But in that kind of situation, I'm more than happy to pick. I like paying those kinds of tax dollars when I know that it's going for something good, not to build a stupid bridge for turtles, but to actually help somebody that's sick. I'm more than happy to pay that. More than happy.
I was just going to say in response to him, certainly no one was saying that this is true for everyone. I'm saying for those who are not in the unfortunate situation that you find yourself in, many of us can cut back on the amount that we're paying even now before the affordable, quote-unquote Affordable Care Act comes into play, Obamacare. We can really say to ourselves, listen, we don't need to go this often. Now, there are people that, like yourself, that do need to go, and there may not be a happy medium, and you may need to, and it becomes expensive, and there's a lot of questions on how society is going to handle that. But I'll tell you this, I would be so much more happy, so much more willing to pay more taxes if I knew, as opposed to giving money to countries who only want all of us dead, that I would take that money plus new taxes to help people like yourself and others who need the help. I would love to see that happen. I think it would be a beautiful way for there to be a sense of community amongst Americans that we are helping each other within that, without the fraud and the abuse and all that in there. And if the government would give some portion of the just stupid giveaways that we give to other countries in the name of politics and God knows what else to some of these problems, like yourself, the person who was asking, we could do a lot more. Not that money just solves the problems by themselves, but intelligent use of our resources. And so, yeah, I would, and I've said this before on the radio, and so has Dwayne, and I think all of us feel this way. We'd all be very happy to help out. A long time ago, I just want to say this, I had gotten in trouble with the law here in Nevada because I had it had to do with cars and they weren't registered and driving without a license and so on. And I got sentenced to going to...
You just don't strike me as a bad boy. That's funny.
Oh, yeah, that's what the girls love about me, is I'm sort of a skinny Jewish bad boy type of guy. And they just can't get enough of it. Anyway, they sentenced me to community service here in Nevada, and I had to do, I think, probably several hundred hours of community service. And so they give you a choice of what you're going to do. Would you like to clean up the streets, the guys with the nice orange thing on? Would you like to, go over here and work doing this? Or would you like to work at the library? Oh, library, that sounds good. And I thought, well, that'll be easy. And I like libraries. It's a big repository of books and interesting things. I thought I'd work there. So I ended up working at the library. And I met some interesting people that also had been sentenced for various reasons. So I ended up doing that, and it took hundreds of hours. So I had to go there 3 times a week, find the time and go in there work. I'll tell you something. By the time I was done working in community service, where you get paid nothing at all, you are there merely giving your help to a cause. I remember feeling the most wonderful feeling that if everybody was, I hate to say forced, but if everybody in one way or the other had done something for others without any payment at all, just for the community at large that you were helping, it gave me a tremendous, overwhelming sense of how much better our community or our world would be if people had that feeling of community, that feeling that it's good to give and not to ask for something in return. The whole thing, it just struck me, and I remember wanting to go back, and did go back to help out later, and I went back in and I said, I know you, I said to the lady who was in charge, as I know it's a little weird, but I actually enjoyed doing this, and I wouldn't mind coming back from time to time to continue. And she said to me, you'd be surprised how many people have said that. So it wasn't just me. Other people felt that same feeling. The reason I bring this up is because this problem of healthcare could be solved by the sense of community, the fact that we do not want people like the person that wrote in to be put out too much because of the financial costs. And wouldn't we all, with that sense of community, want to donate in some way or another? And Americans are very good at donating. You know, we're the most donating country in the world. But I think we could solve the healthcare problem with a much warmer sense of community, because you really don't want people, even people that are not in your family, that you don't know, do you really want to know that somebody's suffering through something that through no fault of their own and so on? I can see helping that and giving that. I think many, many people can. But the division that we have in the country, the unbelievable crude political division that we have that is being fostered by people in this administration and others who only view things in a political view, is half, at least, of the problem that we have. It's half. And I'm not just saying let's all hug and do kumbaya, but we are a community, and if we don't get it right, the community is going to break up. I'm talking about America. The community is going to break up, and the whole thing ends. And so at some point, we do have to have a hug. At some point, we do have to say, hey, we're all in this together. And at some point, we do have to have a way of having everybody know that if they put their hard-earned dollars into something, it's really going to get to that guy. It's not going to get funneled off and put into a lockbox and the money spent on some other highway to nowhere or whatever. I don't know how we get there, because people who run for office are political by nature, and the one we have right now is the most political that I've seen in my lifetime. And so I don't know. All I know is I'm on board for helping other people that need help, like the fellow that wrote in and so many others who for whatever reason are in that situation. If a system could be put together to do that. And I think it can be. But boy, we are a million miles from that. We are nothing but one big barroom fight in America right now. That's what we are living through. It's just an American brawl. That's where we are right now. That's my show. Good night. So
Well said.
Anyway.
Now,
There
I
we
was
go.
surprised at the lack of responses to that question on health care. I'm thinking it might be that some folks don't have it, and so I certainly understand what that's like. But let me just share the couple of, because I asked, what are you guys paying for health care? And maybe a lot of the folks are on a company plan that's 100%, so they really don't know. And so if you are on a company plan and you do have 100% health care coverage, then when you look at your annual salary, you need to tack on a substantial piece of change as when you think about, well, how much am I getting paid to do this job? If you're getting full health care for you and your family, then you should be tacking a minimum of 10 grand onto your annual salary, maybe 20 grand. Now, the responses were quite varied. Here's what I got. Well, there was one question in general. Both parties are guilty of doing what David is talking about in regards to the health care. So to say that the president single-handedly is guilty of the current state of health care in America is probably not fair. And so he is not single-handedly. He came in with a solution that none of us don't like, or most of us don't like, and even his own party, but he didn't create the problem. What he's failed to do,
he didn't create the problem.
He's failed to solve the problem. But he didn't.
No, he's made it worse. He's made it worse. He's done worse than that. He has
No.
made it worse, and it's a big fight, and it's going to be a big fight, and it continues. I didn't blame the president for the existing health care. I'm blaming him for a poorly written health care plan that he will himself never have to live under, nor will any of the people who wrote it. And it's
Not
just
only will he
another-
live under it, he won't even read it.
He won't even read it, and
Okay.
Congress didn't read it. So that's what I'm saying. It's a mess. It was a mess from day one. He's responsible for the mess, and he's the one who wrote it. So he jammed it through the administration, jammed it through, and that's how we got to where we are. It certainly wasn't approved by everything. He's responsible for quite a bit here.
But the same person goes on to say, as a small business owner, a trader, we are reminded every month of the high cost of health care insurance for the lone individual. As a result, I will be thankful for the coming of Obamacare. Now,
Well,
this is
okay.
an individual who is, and I love the way he worded this. He's a small business owner. This guy's a trader. And he recognizes that being a trader is owning a business. I talk about this all the time. When you go into the business of trading, if that becomes your full-time income, it's no different than going out and opening a Subway franchise or opening some other type of small business. You have a business plan, you have a trading plan, you have a cost of doing business. Everything that's associated with running a business is true if you're a trader. You are the business. So, again, he says, we're reminded every month of the high cost of health care insurance for the lone individual. As a result, I will be thankful for the coming of Obamacare. So while it may not be what's good for everybody or in the best interest of everybody, for the individual who has to fork out the money out of their own pocket every month for health care, there is the potential for it to cost you less, but I have heard arguments on the other side that say it could end up costing you, the lone individual, more. Now,
Right, and I hope it works out. I hope it works out for those individuals, Dwayne. I really do. I don't want people to have to go through anything. I'm quite sure that it's like saying, hey, here's a really badly devised plan that somehow does help some people. That's good. I'm glad it helps those people, but it has to work all over. And I wouldn't be surprised.
It needs to work for the majority.
It needs to work for the majority. I mean, it has to work that way, and I hope it does work for you. But I would watch closely what those expenses are and so on. So we don't have to drag it out too much.
James has a very interesting take. He says one thing people should consider is foreign hospitals. Thailand has one of the world's finest hospitals. Now, I've read an article on this before, James, so I'm not unfamiliar with what you're talking about. This is an incredible state-of-the-art with some of the brightest medical professionals on the planet. In Thailand, you can go there, you can get whatever it is you need, whatever kind of surgery, at about 15% of what it costs to have the same procedures done here in the U.S. And I know what initially we all think of a foreign hospital. I mean, I know what it looks like in the Philippines. I know what it looks like in Africa. I've seen it firsthand, and it's pretty horrific. But there are exceptions, and there's a book that James recommends. I've not heard of this book. It's called Medical Tourism. Medical Tourism. And now we have someone who says they pay $2,200 a month for. Actually, this is the trader. The trader, the small business owner. I pay $2,200 a month for a family of 4. Wow. Think about that, guys. Wake up first day of every month and know that you got to make $2,200 coming out of the gate just to pay for health insurance, and then pray that nobody gets sick, because you don't want anybody to be sick. But just in case they do, you know, what is that, $25,000 a year? Some people don't make, the guy at McDonald's who is told that's a living wage, he doesn't make $25 grand a year. Here's another comment. My wife and I have health care paid by the county, and I don't know if that's because you're a county employee, but it says, but we do have to pay an additional $200 a month for dental and vision coverage. Then another response says $1,200 a month for 2 with a $5,000 deductible. Now that right there matches up with what I found for my wife and I. Our kids, as part of the adoption package, the state agreed to cover them with their health care up until they're 18, and if they're in college, if they're going to school, the state of Arizona will actually continue to pay for their health care until they're 24. It's just just a great deal. It's sort of like an incentive. We would have adopted them anyway, but you're not going to turn that kind of a deal down, so we accepted it for the kids. But for just my wife and I, $1,200 a month. Let's see if there was any others. Here's somebody who says $54 a month, I believe, per head, less if you are disabled, $9, free for anyone on welfare. Now, this is somebody who is in Canada. Correct me. I was going to go ahead and use your name, Bob. Bob, I think you just typed in earlier that you're in Canada, correct? So if you could maybe give a little more information, is every Canadian citizen able to receive government health plans for $54 a month? Because he says $54 a month per head, less if you're disabled, $9, free if you're on welfare. And another response, I'll wait for your response there, Bob, but another answer, Mary and I pay $600 a month for a major medical plan with a $10,000 deductible. Fortunately, we're in good health and take no prescriptions. Now, that $600, is that per head or for both of you? John, I'd be interested to know. And see if there were any other responses to that. Karen throws in, the real problem is no accountability with the government or their employees. It's not their money, so they don't care and spend it frivolously. Just look at the GAO, and the IRS with their over-the-top spending on themselves with our tax dollars. Okay, here's another one, $650 a month with a $2,000 deductible. Is that an annual deductible, and is that $650 a month per head or per household? Barb says, I got here late, but according to the World Health Organization, the U.S. healthcare system is rated around 37th in the world. Here's another one. I pay $100 a month for a high deductible, $1,500 per person policy through my company. When I retire, it goes to $500 a month. Okay, John says that the number he gave us was for both of them, $600 a month. That's pretty good. That really is. Marty kicks this in. If you own and sell a piece of real estate that isn't your primary residence, you have to pay 3% of the sales price in the form of a tax that goes towards Obamacare. I know firsthand, but was able to show it as a primary residence. So, see, that's something right there that those who are in favor of this health care plan, there's a lot of stuff written in that, you know, quite frankly, most people just aren't aware of because it's so huge and so difficult to read it all. And so think about that, guys. Any real estate transaction going forward, you'll pay an addition, whatever, besides your short-term, long-term capital gains, depending upon how long you've owned that property. If you sell a $100,000 property, you're going to pay an additional $3,000 in taxes to support this health care package. I'm not saying that's good, bad, right, or wrong. I mean, I don't like paying taxes, so let me just say it's wrong. I don't know why they have to go after my real estate transaction to fund health care. That doesn't seem to me like the right solution to the problem. But, okay, I've exhausted the chat box.
Well, there you are.
So we can go to the markets now.
Yeah,
unless
absolutely.
you got something else you want to...
No, I think that's basically, it's an interesting subject, and everyone, you know, I'm touched by people who have to suffer with that and have to work through it. Listen, if Obamacare, just as a last thing, if it really ends up being passed and really works, I'll be the first one to come back on the radio and say, gosh, I really got that wrong, and I'm happy for everyone. I don't believe that's going to happen, and I believe that before it's all over, there's going to be some dramatic, there's going to need to be some dramatic changes. Because, like I said before, the big complaint about Walmart is now going to be happening in every business with over 50 employees. So that's going to damage the economy, and people are going to be working less. I mean, it's a bad road. And again, like the woman who wrote in and said they're spending somebody else's money, that is a problem that has to be solved at some point. I don't know how to do it, but the fact that we all send money into a centralized place with a bunch of people who are overpaid, who didn't work for that money, making plans for it and doing things with it, we've seen all the scandals. That whole thing goes against human nature. It's part of our system, and that has to be changed some way, somehow, because waste is the biggest part of what the government does. If we saw it all, we would fall off of our chairs, and somebody would have to recuperate us or whatever it is off being off the floor. No business could be run with the waste that this government has, and that includes the tremendous waste in health care and so on. So we'll continue to watch and see how that plays out over the remaining years of his administration here. In the meantime, everything that happens in the world has a reaction in the markets, and today President Obama is speaking, and many other factors are involved, but the market has begun to show a more important decline. We're down about 9 points on the S&P now, and this is an important early confirmation of what we've talked about for the week of June or July 22nd here. This week being very important for those of you who have reflected wave know about this, and we're not doing anything longer term just yet with this. Longer term meaning for a multi-day or multi-week trade, but we have had a nice move down today, and the market is testing some relatively important levels, having reached the 77 level on the downside here, 77, 78, which is in our panel. And I would actually like to see them even get lower, but as it sits right now, we have that test underway. The big picture, I think, is the most important thing that we have going right now, which if we go back just for a moment here, and then we'll scoot along, but the big picture is that we had a very important weekly reflected wave bottom back on the week of June 24th. We talked about it on the program and forecast. The market has had a very fast directional move. It took 3 weeks, but we broke out to all-time new recent highs. And if this week is going to close poorly, then that is going to be another step that it brings us closer to the confirmation of what reflected wave is telling us. So I think that's important, and I'll be very curious myself to see how both Thursday and Friday play out. We'll talk about it here on the radio program. And Dwayne, because we have we do have some people coming in to finish this noisy stuff in the background, I won't be able to stay as long as I normally am.
What are you doing, David? You building a bomb shelter? What's going on, man?
I'm just going to try to find a spot where when they come to have you sign up for health care that they won't be able to find me. It'll be a really complex trap door. No. No, actually, we just added on to our office. That's all we did. The office next door to us has been there for quite some time, and I asked them about it, and we need some room, and I decided to add that on. So what we had to do is the usual, doors and windows and stuff through here so we can get it in there. That's all.
So how much additional square footage do you have now?
Oh, well, just a nice little chunk. That's all. Just a usable chunk. What it'll do for us is it'll allow us to expand a little bit some of the things that we're doing. We have an office in an industrial complex that's kind of a hardened place. It's a good place to put servers and things like that. Mm-hmm. It's not the prettiest place, but it is what it is. And it's funny, I remember seeing this complex here when I first moved here many, many years ago, which is 34 years ago. I remember having some business, something to do with somebody that was in this complex back then. And we're here now. We've been here for, I think, since 2004 in this complex right now. So
okay, right before you and I met.
Yeah, exactly. We had just moved here. Before this, I was in, believe it or not, I was in a strip mall shopping center, if you can believe that, because I told the story, and I won't go into it now, but I had gotten involved inadvertently with, it wasn't a bad thing, but inadvertently with the daughter of Gene Roddenberry, which is the daughter of the man who made Star Trek. Mm-hmm. And Gene Roddenberry, of course, had passed away. This is his daughter. She ran a real estate company out here, and a friend of mine, a good friend of mine, who was a ping pong player. I happen to really enjoy the game of ping pong. If anybody ever says to me, hey, I'm going to be in Las Vegas, do you want to play some ping pong? my answer always is yes, I'll be there, because I just love ping pong. Anyway, I can't play it that well, but I just love the game. So we somehow, because he worked for her real estate company, he had mentioned to her that I was up at my house back then learning about trading, and I did not like being at home. Some people do, and it's very good for them. It didn't work well for me. I felt very uncomfortable in the afternoon still being home. So they invited me to come down to the office, and they gave me a little space. She was very gracious, very nice woman, very down-to-earth, Darlene Roddenberry. And anyway, through a series of really catastrophic events for her, she met up with a man who ended up being a very bad guy, and he murdered her. Unfortunately, that's exactly what happened. And I was right in the middle of all that, and there's even a big full page in the Inquirer magazine. And this is where I first got my first taste of how real and how beautifully adept the Inquirer, not the other magazines, but the Inquirer magazine is with handling and managing this information that comes from the world, staying up with it and putting it in their magazines. And they gave a full page, maybe sometime I can find that magazine and show it to you, on the guy and on what happened to Darlene. Anyway, so when she died, the office, the real estate office that she had been in, which was probably 3,200 square feet or something, everyone left, and I was the last person there. In other words, there was no more real estate going on. Everyone quit, and I was the only guy left in the office. So I ended up continuing to trade from the office because I liked coming to the office, and I ended up, for no good reason, continuing to pay for the full office space, and then later I cut it into half. And this was a strip mall. This was a, these are glass in the front where you can see the person's products through the glass and that kind of thing. And that's where I was trading from I think 1990, maybe 3, all the way through 2004 when I moved. I was in this strip mall. And finally the mall was purchased by somebody else, and they really wanted real tenants there. I mean, I was paying my rent, but, I don't have a sign up, and it just looked like an empty spot. So that's where a lot of my early trading was done, was in this strip mall. And then when we were asked to leave, we had to find a place to get to, and I really thought, we don't want to be in a strip mall. That's the most ridiculous thing. So we found this place that we're at now. And now, because of space requirements of the business and so on, I wanted to get a little bit more space here, and we took the office next door. So that's what the background noises have been and all that, just getting that into play. I do want to say also that today I don't have, even though we've been talking so much about all these different subjects, I personally cannot stay with you the whole time today with all the different markets, and I apologize for that because I love going over them. But with regard to the S&P, just finishing up on it, it's going to be very interesting to see how the remainder of this week plays out, because we are at a juncture which is very common for people who utilize reflected wave. They know this, they've seen this before, and we may be able to do something very good with it. But I am, as I've said so many times, I'm so happy, so glad to be the kind of, I've gotten to the point where I'm so happy to just relax and let the market show me, which means I may miss a trade, but it also means that when I'm in a trade, I have a much greater likelihood of being correct, rather than having to torture myself with, knowing that I'm taking a very aggressive position and so on. It works for some people to take very aggressive positions. It's just that I found my stride. I found what works for me in the markets. And it is much more like thinking in terms of an investor than it is a fast-moving trader. Everyone finds their stride, though, and what I want to say, and then I want to hear from what Dwayne has here, but I just want to say this, that it's a very happy day when you find your stride in a relationship. It's a very happy day when you find your stride in, raising your children, or day trading, or overnight trading, whatever it is. You suddenly figure out who you are in relation to that thing, and you found your right relationship with it. And when you do find that, you can't even explain it, but you just know it. And you may not be able to explain it, but you just know it. You feel wonderful about it because maybe you had to do some suffering to get to that point. And you may tell it to others. They may get it. They may not get it. But everyone is trying to find their stride. Everyone's trying to find their own stride or their own pace with whatever they're doing in life. And it's a very happy day when you find that. And for me, I have found it in the non-focusing on the monetary side of trading, and the bigger focusing for me on simply making sure that I have a high probability trade. And that has really, those are the words. The feeling is much bigger than the words, but those are the bare bones words where how I feel and how I got to my stride. I think everybody, to be successful in this, will have to find it. Even if you have a mentor or you're on your own, at some point it clicks and you say, and you know it's right, and the whole world could say, no, it's wrong, but you know it's right, and it works for you. It's that kind of feeling. And if you think in other areas of your life, you'll see you have found your stride in some other area, and you said, this is exactly how I need to approach this thing. And you'll find that in the markets, and it'll make a difference that is more than just a monetary difference. It'll make the difference that allows you to know that you can do this for the rest of your life and enjoy it and not be tortured by it or be frightened by it. Because I spent 8 years being scared of markets because I knew I was compelled to, I knew I was going to be compelled to trade money in it, and I was also frightened of it. And I have this to say: fear, there's only, the only kind of fear that is the right kind of fear is the fear of something physical or otherwise, that something direct. All these other fears do not lead to good outcomes. And to be afraid of the market while trying to benefit from the market doesn't work real well. Like for men, I know we have women in the audience, but for men, being afraid that the woman, all the things that the woman might say to you that is a no, doesn't help you to come up and have a nice relaxed conversation with her and let her know who you are. That fear blocks that, and it actually produces, in many cases, the exact results that fear was fearing. Strangely enough, it leads you right down the path of the exact thing that you're afraid of, and you don't even realize that that's what's happening. That's what leads people to say, this always happens to me. The same thing, oh, I can't believe it, it always happens to me. That's because what always happens to you before the happening is that you're afraid. That's the happening. Your fear is the happening, and then it just plays itself out in front of you because fear leads you down that path. Check it out for yourself and see if you don't find that to be the case, that when you are dictated to by fear, that it actually produces the very thing that you're afraid of right there in front of you, and we never really make the connection. So you don't want to be a frightened trader.
It's just like that stack of bills on your desk. If you become hyper-focused on that stack of bills, it will literally grow right before your eyes.
Right.
Because that's where all your energy is. That's where your focus is. And that fear thing, I used to wake up with this knot in my stomach. And if guys, if you're experiencing that, and each person has to work this out for themselves, but just know you don't have to live that way. If perhaps you're, if Robin were here, she could talk about you form these neural connections where you, in your mind, that's what trading is you wake up scared to death, and you go and you sit at your desk in utter fear, and you try to do something so that at the end of the day you can feel good for yourself for a couple of hours, feel good about yourself for a couple of hours before the whole cycle, the whole ghastly thing starts over again tomorrow morning. It does not have to be that way.
No, and it won't turn out well if it is that way, and you might blame and say, well, it just didn't work for me or whatever, but I'm telling you, and you know this, in any of these endeavors in life, if there's a wrong fear, if there's something you're trying to do that has fear as the lead player in it, it doesn't end up working out well in most cases. So you really do have to overcome that and find your stride in one way or another. And it takes time, and it takes an interest in making sure that you see what the real problem is. Because I'm the guy that said this same thing always happens to me, and I really did have an incredible, for me, revelation that the thing that was really happening to me was the fear, and then the fear dictated that later the event would happen the same way. It's amazing when you see it and you can actually see that the events are being dictated by your fear. And I can't put it in other words. It sounds non-scientific. It sounds ridiculous, but all of us kind of maybe intuitively have been through that. You realize that your fear leads you. Oh, one last example, and then Dwayne, I will have to run, and I'm so sorry.
Right,
but
so you really are out of time.
I am, but I do want to say this real quick. I just want to say real quick. Imagine you're in a relationship with someone. We've all been there, and you have a hyper fear of a person not liking you anymore, as an example. And we've all either been that person or had somebody in our life that was that way. And because of that hyperfear, everything the other person is saying is being interpreted by you in its worst possible way because of the fear. So that person might actually say something that was really playful or loving, but because you're so hyper afraid of hearing something that might imply to you what you already believe to be true, which is that you're not worth, you don't have the value to be with this person, or you're worthless, or whatever the fear is, you will take something that they say in the wrong way. That will cause a bad response in you. That bad response will put out a bad, for lack of a better word, vibe. That vibe might even cause the other person now to suddenly feel differently about you, and before your very eyes, you took something that was probably an innocent statement, flipped it around, and before you know it, you are actually in the exact position that you were afraid of. The other person now actually is questioning whether or not they should be with you. The other person actually is starting to show some of those signs, and you are interpreting those later signs as even more proof that that person doesn't like you, which now they may not. You've actually created the whole thing out of being afraid in the first place. So you can say, well, how do I not be afraid? Well, my answer would be the first step is to recognize that that fear is there and that you are doing this hyper ventilating on every little thing they say, and you're playing it against it, and before you know it, you have the exact same event play over to you in that area of your life. So now you've messed up your trading, now you've messed up your relationship. How much of that do you need to do before you say, you know what, this world isn't such a bad place, I'm wrecking it everywhere I go. Every situation I get involved with, I'm bringing my little bundle of fears, and before you know it, I've caused a fight here at the car dealership, I've caused my girlfriend to not like me anymore, I can't get a trade on correctly, and before you know it, everywhere you go, you're like a little bomb going off in that area, and you think it's the world doing it to you. And you're exactly wrong, and that's what drives people crazy. You have to really see this for yourself to be able to get over it. And then wonderfully, beautifully, delightfully, you find out that it isn't them. It was you and this fear that you picked up, and you can very easily walk away from it and by watching it and let it dissolve, and suddenly you handle those same situations with such a difference. The other person won't even know, but you know that there's a difference, and now you have a whole different kind of life. It's a beautiful thing, and I really suggest people take a look and see how your own fear is not going to serve you well in the market. It's not going to serve you well in a relationship. And if you can get over it and see it for what it is, you will be amazed at a different kind of life and relaxed view you can have with things that formerly caused you so much grief. And you realize, wow, that grief wasn't really in the air. That person wasn't sending me grief. I was manufacturing it out of my own fear. And you stopped, you gave your manufacturing license back to the county, and you no longer manufacture it. And now you're out of it. So it can be a beautiful thing. Anyway, listen, Dwayne, I'm so sorry that I can't stay, but I'm going to be back here with you tomorrow. We'll talk about the markets more, and thank you, everybody, for your questions and so on about the health care we got on that subject. I'm going to go buy my health care is I'm going to go get a little thing of Band-Aids. Just put it on my desk here. In case something happens, I'll just put it right on. There's my health care right there. Okay. I'll go now.
All right, buddy. Listen, David, have a great afternoon.
Thank you very much.
Is your construction almost complete there?
It's going to be completed today or tomorrow.
Okay. All right, well, cool.
So.
Well, we'll see you tomorrow then.
Okay, very good. Thank you, guys. See you all tomorrow.
All right, take care.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you every day.
All right, guys. Well, we've still got a little time left, so if you have some questions or if there's a particular market that you want to look at, we'll be happy to look at it. In fact, I would like to invite Mr. Burton Schlichter, who's out there lurking about. If you got some free time, if you're not on a call, if you want to pop in and talk about some of the different markets, Bert, love to have you. Michael's frolicking on the beach with his kids and the dog, which they found because the dog was microchipped. So good lesson, Mike's. away from home at the Cape in their summer home, and they have the dog, and the dog got lost, and most dogs can find their own way home, but when you're away from home, it can be a little more difficult, and gosh forbid they start trying to find the original home, because that was a Disney movie, which if you've never seen, that was a great movie and a book. I'm trying to remember what that was called. There was a dog, there was a cat, almost seems like there was another animal in there. Okay, Bert is running solo. Leslie's at the doctor today, so keep Leslie in your prayers. Hopefully it's just for a checkup and nothing serious. So, but I'll still answer any questions you have about any of the different markets. Anything you want to take a look at, I'll be happy to do so. Richard says that Zynga has earnings out tomorrow. Oh, Homeward Bound. Thank you, Ed. That was the name of the book. It was a book and also a Disney movie. And I remember reading that book as a kid, and I really enjoyed that. I really did. That's a warm. My childhood is riddled with some not so warm and fuzzy memories. Not because of I didn't have love in my home. My parents divorced when I was 7, but there was always love. There was no cruelty or abuse or any of that stuff. My mom and in fact my mom and dad, even though they divorced when I was 7, they remained friends. They're still friends to this day. I mean, my dad's remarried like 5 times. My mom's remarried 3 or 4. I don't know. They're still friends. And so that was good. That was helpful for me growing up. But my unpleasant memories stem from the fact that I was extremely overweight as a child. When I was 12 years old, I weighed 159 pounds. Yeah. Today, I weigh 159 pounds. And I'm probably at least a foot taller than I was then, So that, and I didn't have a lot of the social skills that the other kids seemed to have. I was kind of a bookworm, but I relate that to the fact that I was overweight, so I tend to stay in the house and read books and eat Count Chocula, bowl after bowl, which only compounded the original problem that kept me from going outside and all of that. Okay, but then, of course, the playing field got leveled, if you will, at about 14, because that's when we started dabbling in illegal stuff and hanging out before school and after school and down at the end of the road kind of stuff. And kind of it's like, when you're wasted, well, everybody's your buddy. Oh, I love you, man. That kind of stuff. But those weren't real friends, right? I have no contact with those people today. So anyway, one of my warm and fuzzy childhood memories, and I have many, okay? They're just interspersed. That book, if you have children, get that book for them, Homeward Bound. And speaking of books, at the top of the show I mentioned a book by Max Lucado, and Max is a great guy. He made it very easy for me to do my first radio interview with a celebrity, just a salt of the earth kind of guy. He's still out there, and the book that I was talking about, Frank was kind enough to go and Google it up for me. Thank you very much, Frank. The book is called Cure for the Common Life. Cure for the Common Life. And I said I was going to put a bunch of links in the chat box for you. I haven't done that, but I will do it. And even if it's after the show, I'll leave the charts running as I do, and I'll make sure all the links that you might want or find important are in the chat box. Now here's the link to the book on Audible right here. Let's see, I'm going to send to all. Okay, I just put that in. Thanks for looking that up, Frank. It's The Cure for the Common Life. That's the link to it on Audible. Now let me do this. Let me just put in one swoop, I can put in some of the other links that I wanted to put in. This will include taking the free trial over at Audible, so that book, Cure for the Common Life, if you've not used up your one Audible free trial, you could use it to get this book by Max Lucado. In fact, I think I'll add that to my list. My list. I have a short list of books. One is Mike Reed's book, Read the Greed, Take the Money. And this is in no specific order. Trading in the Zone by Mark Douglas. High Profit Candlestick Patterns by Steve Bigelow. And I think I'm going to add to the list Cure for the Common Life, Finding Your Sweet Spot by Max Lucado. All right, so the last link I put in, that one has the link if you want to take the free trial. If you want to get the free trial over at Audible, if you want to download the CFRN Emini toolbar. If you don't know what the toolbar is, let me show you. Let me make sure I got them all in there. Okay, there's the, where it says download our platform and indicators, that's the CFRN free trial. And then download a free audiobook. So like once you go into that link, you then get to search for whichever book you want. And Cure for the Common Life would be one. And then download the Emini toolbar. Let me show you what that is. I know I showed you yesterday, but I'll show you again today. Okay. Stand by. Let me find my browser window. Now somebody sent me a link. I'm going to share this link with you. I can't play it on here because, well, I could play it on my other computer. But I'll let you watch it yourself because the videos, they don't play so great. I'm going to put this link that was shared with me in the chat box. It has to do with ordering a pizza in the future. I don't know why it's funny, but the person that shared it with me said you'll really enjoy this. Take a look at it. All right, CFRN. Let's go there. CFRN.net. On the right-hand side of the page, down at the bottom, towards the bottom, right here, download our toolbar. You just click that and click that. Works on Chrome, Firefox, Explorer. You know, Firefox used to be my favorite browser. I used to brag on it all the time. It's now Chrome. Chrome has, with their latest release, I think they've surpassed Firefox. Now, if you like Firefox, that's fine. My wife, she refuses to switch to Chrome. She goes, I don't like it. It doesn't feel natural. Now, I had a hard time getting her to go to Firefox. She was an Explorer person for years. So one day at work, when she was gone somewhere, I went on her computer and I installed Firefox. She came home and went through, and I made it the default homepage and search engine, the whole deal. She went through the roof. And then I refused to change it back. I made her use it for like 3 days, and then I said, hey, honey, I'm going to change your thing back. I was just messing with you. And she was like, no, I love it. It's so much better. And it is. So I can't come to your house and do that to you, but I'm just going to tell you, you really should be using this one or this one. It's hard to break away from this because, I mean, we've been using this thing since Windows 3.1 or whatever that first Windows was, and then there was Windows 98, I guess. So a lot of people, you know, this little thing here, Internet Explorer, for you, that's synonymous to, that is the Internet. You wouldn't know what to do without it. But I'm telling you, the experience is so much better here and here. Now, that's my opinion. But a lot of folks agree with me because the way the pie is split, I think, well, you can Google up the statistics. But I'm pretty sure that Chrome is now leading the pack for Firefox. I don't believe, well, you know what? Let's find out. Most popular browser statistics. If you want to learn to write HTML and stuff like this, there's a lot of free classes at this website, w3schools.com. Okay. So let's look at these browser statistics. Okay. In the month of June 2013, Internet Explorer had 12% market share, Firefox 28%, Chrome 52%. I was right. See, that's a lot, 52%, because it used to be that Internet Explorer for many years, Explorer was like 98% market penetration. In fact, There was a time when the only competitor I recall on a PC was Opera. And you notice Opera is way over here with 1.7. Okay, Safari, that's for primarily Apple computers, Mac computers like the iMac or the Mac Air, etc. You can install Safari on a PC. Some people don't know that. There's no reason to. There's no benefit to it, but you can. So here's the numbers. See Firefox declining, 30, going back to January of this year, 30, 29, 28, 27. There's a little bump. But it looks like February was the month that Chrome grabbed half the market share. Okay. Explorer, I'm really surprised how much that has. Let's go back to 2012. What was popular in 2012? Looks like it was kind of neck and neck between Firefox and Chrome in 2012. 2011, yeah, see, Firefox was definitely the leader in 2011. Now look over here at Explorer. Okay. 2010, Explorer was ahead of Chrome. 2009, wow, I didn't realize that Firefox had been leading the pack for so long. Look at these numbers compared to Explorer, and Chrome way a distant third. 2000, I guess Chrome first rolled out in September of 2008, so this was its first year. And Firefox and Internet Explorer were kind of neck and neck in 2008. And if we go back to 2007, that's the last year that Explorer was a clear-cut winner over Firefox. So wow, much longer than I realized. So I said all that to say this. If you go to cfrn.net, oh, I already had that page, didn't I? Install the toolbar. It'll work on whichever browser you're using. Your antivirus will say, hey, you sure you know what you're doing? This could harm your computer. You have, it's right here on the home page, or every page, you have my personal guarantee that it's safe. And the guarantee of Jeff Bezos, CEO of Amazon. This toolbar is built in conjunction with Amazon. And why is the toolbar important? Let me give you a couple reasons. The radio station is one click away. You can click that, listen to the radio as you surf the net. Some of you don't know that CFRN streams 24/7. Okay? When we're not doing the live broadcast every day for 2 hours, talking to Dave, talking to Robin, all that, we're streaming what I believe is some of the best. It's the best I can find because I hand program the station. Christian content. There's preaching, there's teaching, there's music, there's discussions, there's podcasts from Catalyst and a number of other groups. Really good stuff. And so if you find yourself with time on your hands, you're driving or you're standing in line somewhere, listen to CFRN. We stream 24/7. Now, there's an app called, if you're on an iPhone, you can't grab the CFRN stream directly. You have to go through a third-party app. Now that's going to change because we're going to start streaming in a couple different formats, so you'll actually be able to just go straight to the site and listen in real time. But you can listen in real time right now by going to TuneIn app right here. TuneIn.com. It's a little app. Put it on your phone. There's a free version, and then the version that allows you to record. Like there's a program on. You're listening, but now the doctor just called you in. Oh man, I was right in the middle of this program. Doc, can you skip me and come back to me? No, you don't want to do that. If you have the $5 app, it's got a feature. You can just hit the record button. Okay, and voila. When you're done with the doctor, you can listen to your radio show that happened while you were in with the doc. Let's say it's 10 minutes to your favorite radio show starts, and they call your name. Oh man, I missed my show. No. You can tell it to start recording this channel at this time and to stop recording at this time. It's just like programming your DVR at home. It's really cool. So take advantage of that. I encourage you. Okay? It's a great app. I use that app probably every day, and I don't just use it to listen to CFRN. I also use it to listen to KJZZ. That in Phoenix is our NPR station, National Public Radio, the National People's Radio, it's called. And that's where I listen to shows like This American Life, and a number of other shows on NPR that I really enjoy. Okay? And I understand they're a little bit left of middle, but that's okay. I'm not tuning in for their politics. I'm tuning in for the programming. And if you've not listened to the show This American Life, it's really good. And that's my Saturday afternoon schedule. Is we get in the car, we go somewhere, the kids have their games or a book in the back, so that my wife and I can listen to that radio program. I'm trying to think of the guy's name. On the tip of my tongue. He really set the bar in the world of podcasting. Now, we started podcasting in 2005. Most people didn't know what it was, and internet radio as a whole was kind of laughed at. It was the fodder of late-night stand-up comedians. Reason being is it just wasn't very good, quite frankly. It was choppy. It was just bleh. Well, they're not laughing anymore, and if you go and listen to some of the early podcasts on CFRN, you'll hear me prophesying, and I'm not a prophet by any stretch, but you'll hear me telling you that, guys, you need to take internet radio serious. It will become the next big thing, one of the next big things, and it will be in your car. And people are like, no, that's crazy, man. What are you going to do, run a Cat 5 out to your car? You're going to need a pretty long piece of Cat 5 to do that. Cat 5, that's that blue cable that runs to your computer from your internet connection. Well, the whole wireless revolution has taken place, and so now out in the middle of the desert, you can get an internet connection, okay? And you can listen to CFRN live in real time. Here's where you got to watch out. If you are not within the range of Wi-Fi, then listening to CFRN using this app could eat into your data plan. Some phones, it might eat into your talk time. So please research it first so you don't get freaked out by some horrendous wireless bill from your provider, AT&T, Verizon. Call and talk to them. Say, hey, I've got this app. I want to be able to listen to this radio show when I'm at the grocery store and there's no Wi-Fi. Am I covered? They might tell you that there's some apps that the nature of the way they work, they don't eat into your data plan or your minutes plan. I'm not sure about TuneIn Radio. I just know that I have unlimited data on my phone, so I don't have to worry about it. But you might, okay? So please check first before you use it. Now, the whole reason I got into all of that was because I wanted to talk to you about the toolbar, okay? Here's the toolbar right up here. Listen to the radio 24/7. You can always stay on top of the latest podcasts, and I've been behind on the blog for a while. I know, and I don't want to complain about how much work I've got to do because I enjoy my job. I'm just admitting I've gotten behind, and I've been working to get caught up, and I'm still on it, okay? But you can do your Facebooking right from the tool without leaving this window. Just click tweets, Gmail. You need to have a Gmail account. It's free. Having a Gmail account does more than give you free email. It unlocks a host of services provided by Google. And so when you log into your Chrome browser, you're immediately logged into all these other services that are offered by Google. And it's free. Okay? Now, Google rolled out something new yesterday. In fact, I was going to share the news article with you anyway, so let me do that right now. I think it's an appropriate time. And then we'll talk about the markets here for a minute. And I'll answer any questions that you have. Let me see. I think I saved this. against paper. Hang on. Bear with me. Okay. And some people aren't happy about this, by the way. If you're a partner, a CFRN partner, and you use Gmail, when you woke up Monday morning to go get your link and your weekly trading zones, there's a good chance you couldn't find it. That's because Google rolled out an unsolicited deal. In other words, it was forced on you. You weren't given an option. You can revert, and I want to tell you how. You can revert, but all of a sudden your inbox now has these tabs. And so we get a flurry of emails from people, hey, where's my zones? Where's my link? I didn't get it. It had put it in everyone's promotions folder. And some of you may still be wondering what happened to your email. Go to your inbox, scroll down below sent, below spam, and well, where'd those come from? Okay, Google forced this on you, all right? And when you find the tab promotions, that's anyone who has sent you bulk email. Okay, what is bulk email? When I send out an email to all the partners, okay, that's a lot of emails going out at one time, and I don't send that many individual emails. I have a list, and I create the email, and I tell the computer, send it to this list. Okay. Well, Gmail is able to recognize when it's a group email or a private one-on-one email. If it's private one-on-one, it's going to go right to your inbox, in theory. Now, there's also an important box. It might decide to send it to the important box. So you're going to have to figure out how you want to do this going forward. But for all of our partners, it turns out their Monday morning email had gone to the promotions folder, and most of them didn't even know they had a promotions folder because, again, this was rolled out overnight, and you weren't asked if you wanted it or not. It just happened. Well, it turns out everybody did get their email. It just wasn't where they were used to it being. Now, you can turn this feature off. You can roll it back. You can make your Gmail the way it used to be if you want. Google's actually made it pretty easy to do that. But before you switch it back, give some thought to whether or not you might find this new method in some way useful. Now, because I'm what they call an early adopter, and because I also use Google and Gmail for business, I tend to have certain features made available to me kind of as a beta version before it gets rolled out to the general public. As a result, I got this tabbed thing over a year ago, but the first day that it was rolled out to me, I came in and I opened up my email and went to my inbox, and I had like a third of the normal amount of emails that I find on any given morning. I'm like, what in the world happened? Internet must be down, or Google's down, and I had to do some research, but I finally found out that there was this promotions folder, and that's where all my emails were, because I subscribed to a number of different newsletters and that type of thing. That's where they all got sent. Now, and go to one of those emails in your promotions folder, and you can right-click it and say, this is not a, I want this sent to my inbox. So in the future, all emails from that address will go to your inbox. You can also take the from address on that email and simply add it to your contact list. That will send it directly to your inbox. Or you can just do away with the whole tab thing and roll back to the way it used to be. Now, if that's what you want to do, to switch off the new folder-based inbox, on Inbox View, click the little gear cog icon, then Configure Inbox, then uncheck all the boxes except Primary, which, by the way, you can't uncheck that one, and then click Save. To switch off the recently introduced Compose feature, which I just don't like. I've stuck with it now for well over a month because I know me, I get stuck in my ways, and when something new comes along, I tend to not like it. So I thought, Dwayne, just roll with this. Roll with this for a month or two and see if you don't get used to it. I still haven't got used to it. But if you don't like the new Compose feature, Click Compose as if starting a new email, and then click the downward-facing triangle in the bottom right of the Compose window. Select Temporarily Switch Back to Old Compose. An alert window will appear with a very condescending message to remind you that you shouldn't expect this option to last. Click Temporarily Switch Back, say a small silent prayer that Google will get the message, and make this temporary option permanent. Also, to revert to the long-lost Gmail interface design. Remember the old Gmail? Access your Gmail in HTML-only form. You will need to remove the folder-based inbox as outlined in the step 1 above, but the overall experience is a splendidly minimalist one. Chat will not work in this view, which will be a deal breaker for some people because they really like to use the chat function. You know, you can do video chats inside of your email. You can do conference calls. You can do a lot of stuff. Did you know you can make free phone calls with Gmail? In your Gmail account, all you have to do is go to, voice.google.com, download that little piece of software. Then when you go back into your Gmail, you'll see a new icon over in the left-hand side. Click that thing. It brings up a little numeric keypad, just like a telephone. You can make free long-distance phone calls to anywhere in the United States. How cool is that? Free phone calls. And that's about it. If you have any other questions, email me, support@cfrn.net, and if it's something I know the answer to, I'll be glad to try to help you. All right, let's scroll down here and see. Iris, the name of that app again, I'll put it in the chat box. Tune in Radio, and there is both an Apple, an iOS version, and an Android version. Luis says, I gave him too much of an overload of information. Okay, I'm sorry. Dwayne, in addition to trying to learn your CFRN platform trading system, the addition of all these different websites seems to support the cause. Seems very confusing. Why not consolidate these support services for us to simplify our workload and simplify the process? Louis, I'm not sure what you're referring to. Which it says all these different websites to support the cause seems very confusing. What different websites are you referring to? Maybe we're just maybe I'm miscommunicating something and not explaining it properly. Iris says, thank you very much for the explanation of the Google email. You're very welcome. Glad to help when I can. Louis, I'll give you an opportunity to type in your response, but I'm guessing that if all you want to do is simply learn how to trade the slingshot that we do in the live trading room each morning, then focus in on that. And when I start to talk about other things like technology or politics or healthcare, any of that other stuff, then, you know, just kind of tune that out to a degree. Because our audience is comprised of thousands of traders from around the world, all walks of life. Some are brand new, some have been at this far longer than I have. So we're serving a very large and very diverse community. So I try my very best each day during the radio program to include a little something for everybody to the best of my ability. There's an old saying, you can't please all the people all the time, but yeah, I try to juggle that the best I can. But if you can tell me specifically which additional website confused you, I'll try to figure out some way to make it less confusing for you. So I'm going to give you some more time to type that in, and then let me see if I can give you a good answer. Okay? Okay, there's a question. Well, if I look at the crude, I will. And will I look at the soybeans? I will. Why did we tune in? For the markets, not your opinions of healthcare or politicians that disrespects the time of your listeners like me who want to make money in the markets. Well, here's the thing. This radio program, as I just said, serves a very diverse community. We have a lot of listeners who aren't even traders, okay? And they sit through all the trading stuff to hear about the other stuff. And this radio program is free to all. Well, it's not free because to produce this radio show every day for 8 years, quite frankly, it's cost a considerable amount of time and money. But yet you, the listener, are able to enjoy the radio program each and every day at no charge to you. And so I will never allow the audience to dictate what I'm going to present each day on the radio. But I will go out of my way to service each and every individual in the audience within reason. Do we talk about the markets every day? We do. Did I begin the show talking about the markets? I did. In fact, the very first thing I talked about today is how a CFRN partner could have made 8 points on the way up, and 8 points on the way down, and 8 points on the way up, and 8 points on the way down, and 8 points on the way up, and 8 points on the way down. 48 points. And people don't even pay for that. If you're a partner, I just give you that every Monday morning before the market opens via email. I just hand that. It's my way of showing you I appreciate you, the fact that you have chosen to call CFRN a home and be a part of our community. Here's a little something from me to you. So, again, can't please all the people all the time, and that may be a character flaw of mine in that I still try to the best of my ability. So, all right. What else did we have? I wanted to hear about the markets, not this twaddle from David. Well, you've already left, so you've been spared the twaddle. How about that? And another one, can you talk about the markets, please? Well, we will. We have, and we will. But you've left also, so that's okay. There are radio stations that do nothing but talk about the markets. They don't have any human interest stories. They don't have any politics. You might be better served. We hate to lose you, hate to see you go, but I want what's best for you, and if that's not us, then, you know, please find something that's right for you. Find your sweet spot. Okay, scrolling down. Dwayne, what is the third book in the trilogy you recommended? Okay, John, in no specific order, there's Read the Greed by Mike Reed. Now, that's a play on words. His last name is spelled R-E-E-D. Read, R-E-A-D, Read the Greed, Take the Money. That's the name of the book. And the only place you can get that book is at his website, tradestalker.com. Okay? And it's under $100 the last time I looked for the ebook. Okay? Well worth it. He has a DVD set, also Read the Greed Live. That's more because it's got, you know, hours and hours of stuff on DVD. So that's one book. And again, this is in no specific order. The second book on the list is Trading in the Zone by Mark Douglas. There's two books by that title. Make sure you get the one by Mark Douglas. The third one in the zone, the third one in the list, or on the list, is High Profit Candlestick Patterns. That's by Steve Bigelow. Steve was one of our first guests on CFRN way back in 2006. He primarily is a stock guy, which is why he didn't end up becoming a regular guest on the show, and he would be, and he's willing to, and we've talked about him coming back on at least, you know, a couple times a week, and I'm really leaning towards doing that, even though he's primarily a stock trader. The candlestick patterns work for any type of market. Okay? Doesn't matter. They work. High profit candlestick patterns. Now, that's a subjective art. What do I mean by subjective? In other words, I might look at one candlestick signal and you would look at the same candlestick signal, and even though there is a textbook definition for each symbol, how you and I trade that symbol might be very much different, okay? But it's a great book. I read my book till the pages fell out. There's on the blog, there's a picture of my book, High Profit Candlestick Signals by Steve Bigelow, with the pages all splayed out on the desk. Now, I've kept them in order. They're still inside the binder. But and Steve, if you're listening, you promised to send me a new book, brother. And you said you'd send me a copy of your new book, which I haven't read yet. Now, don't make me order it, all right? No, I'm kidding. I'll be happy to order it. But you said you were going to send me one. So please do, if you're out there listening. Great book, guys. Now, this is one book that does not translate as an audio book because it is 90% charts, okay? You need to be able to see the charts. And the last book, the one I added today, is Cure for the Common Life by Max Lucado. That has nothing to do with trading. That has everything to do with finding a life's work that is meaningful to you. Because let's face it, unless you hit the lottery or inherit a bunch of money or you're already retired, you're going to have to get up and go to work every day somewhere for somebody. It might be for yourself. Just like one listener said earlier today, I'm a small business owner. I'm a trader. I love that. I would love to just print that out and frame it and hang it on my wall because that's something I try to teach to every partner that comes through our doors. You're not, this isn't a, you know, I mean, could it be a hobby? Well, yeah, it could. But most of us who are in here on this radio program and who are partners, our goal is for it to be full-time income. That's our intent and purpose. And so I try very hard to convey to you that concept that you're no longer an employee. You're the CEO, the COO, the CFO, the C whatever O. You are the chief everybody officer. Okay? Yeah, that's it. When you're a trader, you're the CEO of the company, chief everybody officer. You got to police the trash can and the bathroom and make the coffee, put on the orders and take off the orders and balance the checkbook, all of that. Now, if you're good, no, I don't want to say good, if your skills escalate to the point where you need to hire someone to help you with some of the duties, that's great. There's nothing wrong with that. In fact, I encourage it. It's a way of stimulating the economy. Each person, don't put that out there as some benchmark that, you know, oh, I want to be so good that I have to hire employees. I guess you could. There would be nothing wrong with having that as a goal. But a lot of us who were small business owners and who had a lot of employees, one of the things we find attractive about trading, we don't have all those voices in our head every day. I mean, some of us still have a few voices in our head, but we also find that after being away from that environment for a period of time, we kind of miss it. And that's where I find myself. It was good to get away and have a couple of years of solitude, peace and quiet. I had some me time, right? But I'm kind of at a point now where I'm realizing that there were certain aspects of that I truly miss. But I also realized that I can't have just the good part and not, it's a complete package. There's good and bad with being an employer and having a lot of employees, good and bad. You've got to be willing to accept both sides of the coin. And every coin has two sides. So whenever you're presented something, always ask, well, what's on the other side? Because somebody may be telling you the bad about something. Okay, well, there's probably some good in there too. Tell me about that. And vice versa. All right, I promised to look at two markets. That's all that was requested, so I'm going to look at those two. Steve has a comment. Dwayne, let the listeners know that politics sometimes can affect the markets, so they are actually related to a degree. That's true, some more than others. Thanks for sharing that, Steve. Jeanette asked again, what was the name of Mike Reed's book? Okay, his last name is Reed, R-E-E-D. The name of his book is Read the Greed, R-E-A-D. Read the Greed. Now, as far as I know, the only place you can buy his book is on his website, tradestalker.com. Okay, Lewis says that what he was referring to, originally Lewis said, and let me just recap. Lewis said, Dwayne, in addition to trying to learn your CFRM platform trading system, the addition of all these different websites to support the cause seems very confusing. Why not consolidate all of these support services for us to simplify our workload and simplify the process? Okay, I see what you're referring to. Well, here's the thing, Lewis. From CFRN, you can go and watch. Let me show you. If you go to CFRN and you go to the blog, down at the bottom of the page, oh, I think I turned mine off the other day, didn't I? Oh, it's popping up in the background there. Anyway, if you haven't made the mistake of turning yours off, this little toolbar comes up across the bottom. Let's see, if I open up, I don't like to do this. Okay, if you open up our website, down at the bottom, YouTube videos. There you go. Boom. All of those videos out there on YouTube, they're right here. See, there's the one from today, 7/23/13. See, Lewis? So, one more time. If you just go click this up here, Emini Radio Blog, it's going to take you to this page. At the bottom, click YouTube. And right there is the video recap that I showed earlier today and that Michael did today. Okay, so that's one of the sites. The other site you mentioned is Facebook. Right here, our Facebook page. Okay, you click that. CFRN E-mini Futures Trading. And here are all of the Facebook posts, all on this one page on CFRN. And then down here is Twitter. Join the conversation about E-mini trading. So that takes you right to the Twitter. And then the Google Plus. Okay, that's this button right here. Pinterest, it's right here. And of course the Play Games, the new tab I added for you guys, which I got to tell you, I just think is really cool. You can come here, you can play games with your Facebook friends or perfect strangers, if anyone's perfect. You can even play the slingshot game. I have no idea what that even is. So you click play now, and it will randomly assign you an opponent. But I'm going to close it before it assigns me an opponent because I don't want to run out on somebody. Okay, so let me get that out of the way. Now let's go look at those markets you guys asked about. Okay. Now, see what happened here on the S&P 500 E-mini futures. Price did that thing that every day you hear me go, well, it just did the thing. All right. In case you missed me drawing it, I'm going to draw it again, not to tick you off, because it's so important. Okay. And remember yesterday I said if this is the only thing you ever take away from this radio show, take this away. Price did this, and then price did this, and then price did this. How often does that happen? I don't know, every day. So if you can find something that happens every day, wouldn't that be a good place to build your trading methodology around, perhaps? Wouldn't you want to embrace something that happens basically every day, multiple times a day? Now, this doesn't just happen on the hourly chart with the S&P 500 E-mini futures. This happens on in every market, on every time frame, from 1 minute to volume charts to weekly charts, because the markets are fractal in nature. Whatever you observe on any chart in any time frame, you're going to find it elsewhere as well. Okay, nature of the markets. So let me get these out of the way and then out of the way. Now, I had put a post that said, if you're short the S&P, consider taking some or all profits as we approach the weekly trading zone. I then came back and said, if you're short, consider taking it now, because with this candle right here, it looked like the market was trying to put together a rally. Now, I talked about this yesterday as well. Well, I always be overcautious. Will following what I have to say in many cases cause you to leave some money on the table? It will, because I'm practicing and trying to convey to you aggressive risk management. Now, once you reach the point in your career where you're able to consistently and confidently sit down at the computer and pull out your 2 points, whether it takes 1 trade or 10, doesn't matter, it's the same 2 points, okay, net. Then if you want to become less aggressive with your risk management, if you want to alter some things, you've earned that right, okay? If you're taking what we do and trying to mix in stuff from your past, I'm not going to tell you that that other stuff is no good and it's worthless. Never. I would never ever say that. I would simply ask that you put it aside for just long enough to allow you to focus 100% on what we're trying to teach you, and then once you've learned all we have to teach you, then see how you would be able to work your stuff back into that, because you're going to find value in it, okay? And I speak especially to those who, like myself, spent years and money. Now, the money can be replaced. The years cannot. Time is a unique commodity. Soybeans, you can always grow some more. Corn, yep. Money, go get another job, right? But time, once you spend your time, it is gone forever. So first off, stop spending your time and start investing your time, because we have a limited amount of it here on this earth. Now, we believe in eternity, and so that's a very, very long time with no beginning and no end. But the days allotted to us here on planet Earth, it's a narrow window in the scope of eternity. So try to get a handle on what we're doing and how we do it, then layer back in the stuff you may have spent years learning, okay? Because if you do it in that order, I think it could end well for you. We had someone the other day who's really been frustrated because they just could not let go of a couple of the other things that they were doing, which always contradicted with what our signals were saying. And so when I showed them this and pointed it out and made it obvious in charts, they just could not overcome that psychological hurdle of, I said, now if you hadn't used that, if you'd have just gone with this, what would the results have been? Well, it would have been all right. Well, it would have been all right. Well, it would have worked out. Yeah, it would have been okay. So I'm not trying to brag about our system. Our system is only one of an untold number of ways that you can trade the market. Okay? But we have one way, and that's the one way we know inside and out, the one way that we truly understand, that we have our confidence in. See, we can come and sit down every day in front of the markets, bring up a chart, any market, any time frame, and we're confident that we can take a couple points a day out of that market. Okay? But the second you bring some other idea, thought, methodology, indicator, oscillator into the picture, we don't have experience in that, and so we can't guide you or teach you with that. So that's why we ask you to just push it aside. It'll be there in a month or 2 months when you're ready to add that in, if you feel the need to add it in. after a couple months. So, okay. See if we got any new questions, and then we really will go to those markets. You're very welcome, Lewis. I'm glad I could help. Hey, Bob Z, honestly, I wasn't even thinking about you. I was thinking about somebody else. Bob has a hang-up with with one indicator, but no, honestly, you actually make my point, but I had somebody else in mind when I was making that statement. So I said consider getting out now. I changed it, and that was as this green candle was starting to build. Now it appears. I'm sorry, can you see that I'm working? Can you see that I'm working? Shut my door. Shut my door, please. Okay, and so it looks like price is going to continue its journey down. So what happens if you'd have got out here? All right, the swing low of this candle was 79. The zone is at 7. It could have cost you 3 points. Okay, guess what? You're at 78.25 right now. If you were to get back in, there's still 2 points to be had down to the zone at 76. What does that look like on the smaller time frame? Okay, see this? Also, look at what happened here on that pullback. Now, we already pointed out that there is an excellent trade to be had here. All right, we did that earlier in the show. Price is coming down. We've got the bearish cross. Price pulls away. Price pulls back. We look down to check divergence. That's step number 4. 1 is the bearish cross. 2 is the pull away. 3 is the pull back. 4 is we check for divergence. Yes, we have divergence, but the color has changed. We need a trend line. So we draw a trend line from this swing low right across the tops there, up here. And so what we need is we need a down close below the trend line. Here's a up close above the trend line. That doesn't qualify. This candle is the one that qualifies right there. Can everybody see that? That's the qualifying candle. Let me open this up a little bit. Okay. See, I drew my trend line here. We need a down, because this has changed colors down here. We need a, see, sometimes you need a trend line, sometimes you don't. When a bearish cycle has turned blue, it's still bearish because of where it's positioned on the chart. It simply means you need a trend line for added confirmation. This candle, although it breached the trend line, it closed above it, so no good. This candle is the one that closed below the trend line. Okay, so now we're ready to sell the market. The market opens, or the next candle opens at 1682.50. Let's write that down. 1682.50. Okay. That's the entry. The drawdown, and there is a drawdown in this trade. Swing high of this candle oh, wait a minute. This candle closed at 82.50. Is that right? Yeah. And this candle opened at 82.50. So actually there was no drawdown. You were entering to see this candle. Oh, wait. I'm sorry. This is the candle. I'm surprised nobody caught me on that. Let me look at the chat box. Okay. Hang on. All right. Remember, we're looking for an up close. A down close below the trend line. It's not this one. That's an up close. That's an up close. This is the down close. This candle. That's what happens when I try to think about too many things at once. This is the candle where we take action. So now we want to sell the market. So we're going to sell the open of this candle, which is 1681.50. This is important because with our method, you always know your entry price to the tick. So many times you hear things like, you know, this might be a good area to get long or a good area to get short, or, you know, we want to consider being long in this neighborhood. Well, that ambiguity can not only cost you money, it can make you a little crazy. Because the guy spouting out those calls, he's always right. Somehow he always nails it. And somehow you always don't, or sometimes you don't. Wouldn't it be better if you were given a to-the-tick entry price on every single trade? No ambiguity, ever. Wouldn't that be better? I think so. That's why we designed it this way. So, here's the close below the trend line. So we're going to sell the open of this candle. This candle opens at 81.50. The drawdown, price runs up to a swing high here of 82 1/4. 1682.25. Okay, that's the drawdown. So how much is that? 3 ticks. So we have a 3-tick drawdown. Okay. And from the entry at 81.50, which is the open of this candle here, I'm sorry, it's the open of this candle here, because there's our down close below the trend line. Price goes down to a swing low of 77 1/4. Okay, 1677.25. Now, if you're only looking for 2 points, from 81.50, 77 1/4, that's roughly a 4-point move. From 81.50, 77 1/4, 4-point move. Okay? Now, can you take 2 points out of a 4-point move? You can. You absolutely can. Okay? Now, look what happens right here. Things change. The bears, the sellers, are in position. They're running the ball down the field. Okay? But right here, the bulls, the buyers, if you will, take control of the ball. They're now in possession of the ball. So, if you were short from up here at 82 1/4, did we determine that was the right entry? I wrote it down and then still messed it up. The open of this candle, open of this candle was 81.50. All right. 1681.50 is the entry. Okay. All right. Let's say that you weren't just satisfied with your 2 points. No, that's okay. Let's say you want to stay in it for the longer haul. Let's say that you want to trade this thing down to the zone. Okay. Well, where's the zone? The next zone down is 75.76. Okay. So you get in here. Okay. You have a little bit of a drawdown. The drawdown was, the high here was 82 1/4. So there was a 3-tick drawdown. All right. And then price moves in your favor. By the time you get down here, you've got roughly 4 points on the table. Price pulls back, and it looks like it's going to continue down, but it doesn't. We don't put in a new swing low. Now remember, that's the definition of a downtrend, lower lows, right? So here's a low, a swing low. There's a lower low. There's a lower low. But after this pullback, we don't get a lower low. We get a higher low. Something's afoot. What's going on? Well, that mystery is answered right here. The bulls have taken control of the ball, the buyers. Now they're running this thing upfield. Okay. If you're still in this short trade, you should be out right here. Okay. You could have gotten out with your 2 points. You could have gotten out with your 4 points. Well, for whatever reason, you chose to stay in. Okay. Well, once this happens right here, once you get a bullish close back above the BBC, now you're throwing away money if you don't get out of the trade. You just are. Okay? Now, could it turn right around and go screaming down? It could. I'm just telling you, you should be exiting this short trade if you're still in it at this point. And that'd be probably about the time that I said that I changed, consider taking some or all profits as we approach the zone to now. It's probably about that time that I said that. And I said that without looking at the 4-tick chart, because once you've stared at these charts long enough, you just kind of got an idea where it is in the different time frames. Okay? That's just something you develop over time. Only exposure to the markets, watching charts and trading will give you that skill set. Okay. Now, price goes up, we get a bullish cross. Price pulls away, price pulls back. We had a nice trade on the downside. We are looking from the bigger picture perspective to go from, now see, this is a trend down day. So the bias, not our personal bias, but the bias of the market, the sentiment of the market at this moment in time is lower prices. And where's the most natural place for us to spot the next place in the market? 75, 76. Okay. So if you take this trade, or attempt to take this trade, this is what would be called a counter trend trade, because the trend today is down. How do I know it's down? I just showed you. I looked at the chart. No, I didn't have to measure anything. I didn't have to go look at any other indicators, advanced decline line, or anything. Not that there's anything wrong with looking at that. I'm just saying I didn't have to. It's just very visual. This is a trend down day so far. Could it change in the afternoon? Yeah, of course. So, if you wanted to take a counter trend trade, bullish cross, number 1, price pulls away. Number 2, price pulls back. Number 3, we look down. Actually, the pullback's on this candle. We look down. Do we need a trend line? Well, no, we don't, because the cycle is still blue. Hasn't turned red yet. It does over here. But on this candle, the one that pulled back, it's still blue. So, then what do we need? We need an up close. Okay. Now, here's an up close. But this up close is not above the BBC. And this is one candle away from hitting the BBC, which totally negates the trade. So, number 1, I would not have been interested in this trade because of the counter trend nature of it. Number 2, because my up close, if my up close had been 1 tick above this BBC, I'd have been happy to take the trade if I was looking to make a counter trend trade. But I wouldn't be, and so there was no trade here for me. Now, right here, power shifts again. Now the bears have the ball. Okay? Right there. All right? Bearish cross, price pulls away, price pulls back. We're going to look down here. We have no bearish divergence. This is actually bullish divergence, so we have no trade here. Now what's happening? Price is about to cross. Now, somebody asked this question the other day. Does the slingshot have the ability to keep you out of choppy markets? You're seeing it in real time right here. We did not have a long trade here. We did not have a short trade here. And will we end up with a long trade here? Let's see. First thing we got to do is we got to have a bullish cross. Then price has got to pull away, then price has got to pull back, and then we got to have an up close if we have bullish divergence, which we don't have yet. So I can't answer those questions. But here's two back-to-back instances of the slingshot keeping you out of a trade that would have not worked out for you. Okay? And that's if you were, number one of them had to do with even if you were willing to take a counter-trend trade or not. That's a personal decision you have to make. Okay, now let's look at these other markets. Soybeans was the first request. We had a tweet yesterday to be short below 1275, okay, and that went 16 ticks in our favor yesterday. The swing low was 1259. So, did I do my math right? 1275 minus swing low 1259. Yeah, 16. So there were 16 cents in this move, and 1 penny in the soybeans is the same as 1 point in the S&P. Why is it the same? Well, each penny pays $50, and each point pays $50. So 1 cent equals $50. Now that's win or lose, okay? If you and the market are on the opposite sides of the street, it's costing you $50 per penny. It's not making you $50 per penny. Now we continued lower today. We got all the way down to 1253. Okay, so there was another. That was 59. So there's actually another 6 ticks to be had if you stayed in the trade. Whether you would or not, I don't know. Somebody had asked me the other day what a bullish engulfing pattern looked like, and I had drawn one on this chart. No, this chart. I had attempted to draw one, bullish engulfing, but we actually have one that we can see here. Okay. This whole the context was beautiful, and a nice down move over a period of days, weeks. This high is higher than the previous candle. This low is lower than the previous candle. That is one of the best, in my opinion, as long as it's in the proper context, one of the best bullish signals to go long. Okay? And, true to form, it delivered. I didn't put out a tweet last night on the beans or the S&P or the bonds for a couple different reasons. I don't even need to go into those. I didn't. I do plan to put some out tonight. That's another thing, guys. I do the tweets just as a way of reaching out, as a way of sharing, as a way of helping. It's not that I want people to rush out and trade my trades. It's not an ego thing. I'm just sharing with you what I see. My goal is, if you trade it and make money, well, that's between you and God. All right, good for you. What I want is I want you to look at one of my tweets and go, huh, now why in the world did he say that? I want you to then go to your charts, and I want you to do some head scratching and some thinking and some looking and some figuring. And I want you to learn how to read the chart. If you learn how to read the chart, the trading part will just kind of come along with it, okay? I mean, you're still going to need help in that area, and we're here to help you with that. But initially, understand what the chart's telling you, okay? Every tick has a story to tell. Okay? Now, don't try to overread it, because it gets real noisy when you do that. Now, was there a specific question on the soybeans? Let me go back up and see who asked the question on the beans. You know, guys, there's so much to scroll through here. Oh, I see it now. Would you look at the soybeans? Thanks. Sure, Alan. I'm on the soybeans daily chart. Is there a specific thing? Do you just want to know if I see a trade coming up or something I'd be willing to tweet out? You're getting a buy signal. Okay. All right, I'm going to have to go to a different time frame to see a buy. Right now, what I see, if I were going to tweet something right now, I would consider, in fact, maybe I will. You see this swing low here? And then price has been trading between this high and this low for 1, 2, 3, 4, 5, 6, 7. So any move below 125, 12.50 and a quarter, okay, I would want to be short that move. I'd want to be short that move for a potential move back to this swing low, okay? So if this number, this low is 12.50 and a quarter, let's go find 12.50 and a quarter. Okay, that's 12.50 and a quarter. I want to be, how is that possible? Okay, the low, 12.50. I want to be at about 12.48. I want to be about 2 pennies below that. So that's the short side. I'm not going to put it on the screen yet. Let me just write this down. Short below 12.48. Okay. Now let's go to an hourly chart. This is hourly, so let's go Z. Now with beans, guys, because there's months that we don't really trade. Long explanation, you can't use the continuous symbol, or you shouldn't use the continuous symbol with this. You need to use the actual month. ZSX3. Soybeans, that's November soybeans. That's the most active month and contract that we're trading right now. So on an hourly chart, I don't have anything either here to put me long. So let me go to a 4-tick range chart. Perhaps that's where you're seeing it. Let's go to a, let me erase all this stuff. Okay. CSX3. Okay, let's see what we see here. Okay, all right. Now, if you were looking at a 4-tick range, bullish cross, price pulled away, price pulled back, check for bullish divergence, you've got it. You've got everything you need. The only thing you need is an up close above the trend line. The only thing that kept you out of this trade. See, the cycle's gone red, so you got to have the trend line. But even if you didn't need the trend line, now think about it. This is a great example. Thanks for sharing it. We had the bullish cross, check. Price pulled away after the cross, check. Price pulled back to the BBC, check. Got to have bullish divergence, check. Now all I'm doing is waiting for that up close above the trend line, and I'm long November beans. We never got the up close above the trend line. And if this candle right here, if it closes above the trend line, here's the problem. The black line has been pulled down into the BBC, and that just stands for bull-bear cross line. See, as I've showed you, right here, this is where the bears take control, the sellers take control right there at that cross. The The bulls take control very briefly right there. The bears regain control right there. The bulls regain control right there. So based on this, I don't have a long trade, and I bet you that's what you were looking at. Let me go look in the chat box and see if that's what you were looking at. Is that what you were looking at? Okay, great. So yeah, you were right. Everything was there. But again, this is the slingshot guy is waiting for all the criteria to come together. And what's beautiful is you can do it all in one chart. You don't have to go look at, there's a lot of different things you can go check. I mentioned the advanced decline number for, I don't know why. It was just stuck in the back of my head. Some people use that, some people don't. Probably half the people don't even know what it is. But some people have been taught you need to go check that. And if that's part of your routine and what you do, and if it's working for you, I never want to encourage you to change something that's already working for you. Okay? Now, you may think it's working for you, but it might not be. You have to be very objective when you ask yourself these types of questions. Does it give the appearance of working for me because I want it to be, and if it's not, then I don't have anything? It is hard after a couple years of at this realizing you don't have anything. Painful, but just for a moment, because that sets your foot on solid ground, and now you're headed up the mountain on a solid path that actually takes you to the top of the mountain. See, there's paths on Trader Mountain that don't lead to the top. Got to make sure you're on a path that actually, it might be hard, it might be tough, there may be a lot of obstacles, boulders you got to crawl over, streams you got to wade through. But as long as it's a path that ultimately leads to the top of Trader Mountain, that's the path you want to be on. There's a lot of blind alleys, so just be careful. Now, I came up with a number, 1248, that I would consider being short on beans. You'll notice that on 1248, because this is a much smaller time frame, 1248 doesn't even show up here. Let's scrunch it up and see if we can find 1248. Wow. Got to be there somewhere. Goodness gracious, what day was that? Let's see. Oh no, I need to go to the daily. Okay. Okay, it was way back here on July 15th. So here we are on July 24th. I'm basing a selling decision off of action in the market that happened on the 15th, more than a week ago. Okay, on the 4-tick range, you can't even see it. There it is, right there. There's that swing low. Swing low was 1250 and a quarter, and that's the 1250 and a quarter right here. But remember, I want to be a little below that because sometimes price will come down and spike an area. Now, because we got a lot of room to run with no obstacles in our path, I can be generous with myself. I can even go 1247. Okay. So I don't want to get triggered in needlessly. I don't want a false start. So I'm gonna make this a tweak. Consider being short below 1247. Now, all we need to decide now is, well, what if the market doesn't sell off, Dwayne? What if it decides to rally out of here? Okay. Well, the next important area overhead for me is 1275 because we had a very successful tweet off of 1275. So I'm going to have to recognize that in my calculations. Now, I could easily say I'm going to consider being long above 1298. Okay, there'd be nothing wrong with that. Can we come up with something that's maybe a little more doable inside of today's time frame and today's scope? Yeah, we can. Let's look at that and see if we want to. Let me unscrunch all this. Okay. So we got this little double top here. So we're going to call that $12.59. Now, this little double top over here, what price is that? Let's call that $12.64. Okay. So, if I'm willing to go long above $12.60, where are my obstacles to the trade? Well, just using what I've got on the chart right now, obviously there's an obstacle for us here at $12.65. So from $12.59 to 65, that's 6 cents of room to run. Okay? This represents 6 cents. Now, is that the same as 6 S&P points? Yep, it is. Is that a great day's living? A great day's paycheck? Yeah, it is. Does it create the opportunity to just grab a couple points, a couple pennies? It does. Okay. Now, what's the downside potential of what we looked at? You see, once we break this area here, once we're inside the body of this candle, okay, now the number we decided on was 1247. The swing low of this candle here is 1225. So 47 minus 25 is 22. So if we get triggered on the downside, there's a 22-cent potential staring us in the face. If we do the long trade, the way I just showed you on the 4-tick range, we've got 4 cents potential, or 6 cents, whatever it was. What did I say it was? 6 cents potential on the upside. Now, but you can't go all the way to this top. You're going to have to back that thing down to at least 64. So that, let's call that 5 cents. So 22 cents room to run on the downside, 5 cents room to run on the upside. Well, let's look at this thing a little differently. Let's go look at an hourly chart. Okay? What about if we look at this area right here? Let's get a little bit above that. Now, this is an hourly chart. Now, remember, we've looked at a daily chart. We used a daily chart to pick our downside trigger. We've looked at a 4-tick range chart for an upside trigger that gives us 5 cents of room to run. Okay? If we use an hourly, this number here, now let's get a straight line going on. Straight? Yep. Okay, the swing high here is 1270.75, and here is 1269.75. So I want to be at least 1273. Now, from 1273 up to this swing high, that's 1296. 96 minus 73, 6 minus 3 is 3, 9 minus 7 is 3. That's 23 cents room to run. Okay, but we don't want to, we can't risk running all the way to the top now, can we? Because we know that buyers and sellers have a tendency to come in early. Look at this beautiful run the sellers had here. Do you think they might come in early on this trade? They sure might. All right, then let's prepare for that. Let's come down to You know what? Since we got so much room to work with, let's come all the way down to 1292. All right. So we've decided we would like to be short below 1247. That gives us 22 cents room to run. If we're going to get long above 1273, write this down, long above 1273, up to 92, 92 minus 73, so we got 22 cents on the short side. What did I say this was, 95? Oh, 92. 92 minus 73. I'm doing this by hand. 19. Okay, so we got 19 points on the upside, 22 points on the downside. All right, let's go ahead and let's make this official. Okay. ZSX3. Consider being long above 1273 or short below 1247. Whichever presents first. ZSX3, consider being long November soybeans above 1273 or short below 1247, whichever presents first. Post. Okay. Now if we go over to Twitter and we refresh our window there, there it is. Consider being long November soybeans above 1273 or short below 1247, whichever presents first, and then it chops it off after 140 characters. And you click this, and it'll take you right over to that post that I just made on the Facebook page. Okay. But instead, what I need to do is I need to go to, highlight this, and okay, my work here is done on the soybeans. We're going to consider being long above 1273 or short below 1247, whichever presents first. Now some people would look at that and go, well, that guy doesn't even know what's going to happen. He doesn't know what's going to happen next. I don't. I truly don't. And I don't care what happens next. How much pressure does that take off of you to be able to go, I don't care what happens next. Doesn't matter. If price travels above 1273. Yay, I've got a trade. If price drops below 1247, yay, I've got a trade. See, I know what I'm going to do based on what the market does. So I don't have to beg, plead, cajole, anything to try to get the market to do what I want it to do. I'm just going to sit back patiently, let the market show me what its plans are. And remember my concept of I'm not out to beat the market today. I brought the market coffee and a bagel this morning, okay? Some people call me a suck-up. That's okay. I don't care. I want to be friends with the market. Friends might be a stretch, but a business associate, right? I just want to do what the market's doing. Now, for some people, that doesn't sound like a real man. You're not a rebel. You're not a renegade. Well, a lot of the renegades I've seen in my day live some pretty ragtag existences, hiding out in caves, haven't had a decent shower or shave in weeks. Nah, I'll pass. I've grown quite fond of hot showers and sleeping with a roof over my head. I really have. God willing, it'll stay that way. I pray. Now, Jonathan sums it up pretty well. He goes, you know exactly what's going to happen. It'll either go up or it'll either go down. That's right. You nailed it. Rick, you're very welcome. Alan, you're very welcome. Bob says not relevant. Bob, I'm not sure. Lewis says soybeans are closed for the day. Soybeans are an electronic market. Bob, Lewis, they trade round the clock. They'll be opening up again here shortly. We don't trade the pit session. We actually trade the electronic market. Okay. So you can Google soybeans, contract specifications, CFRN. You can leave off the CFRN part, and it'll take you to a page that gives you the hours that the electronic sessions are open. And that's a good point. I'm glad you brought it up. We do not trade pit sessions. We trade Globex 24-hour. So when electronic trading kicks in on the beans, we already know what we're going to do. We don't even have to be at our desk. We can put in an order. I'm not recommending that you do that. I'm just saying with the technology we have available and the ability to use bracketed orders, you could do that. Okay. All right. So Al, I hope that helped you out. So Bob, back to your question. Not relevant. What wasn't relevant? Tell me. Oh, it might have been when I said, "Do I know what's going to happen next?" If your comment was not relevant, then you're absolutely right. It's not relevant which way it goes. As long as you know what you're going to do, whichever way it goes, that's all you need to know. Hey, Jonathan, what hour do beans kick back in? Let me see if there's, oh, somebody had asked about crude. So let me see if the crude person is still here. If they are, then I'll walk through the crude thing with them. Oh, Thomas, I'm sorry, I missed your question. What's the BBC and how do you build it? The BBC it's just a fancy name for the bull-bear cross line, or a not so fancy name. It's probably a better way of saying it. BBC, bull-bear cross line. If price is above the BBC, the buyers or the bulls are in control. If price is below the green line, the bears or the sellers are in control. And that green line, that's the dividing line. When price action crosses over to the north, bulls. When it crosses south, bears. Bulls or bears. One of the two, even in a flat market, one of the two has the upper hand. One of the two is in control of the ball, even in a sideways market. Now, there's that rare instance, you know, when price flatlines just right across the BBC is like running right through the middle of price bars. That is such a rare occurrence. Don't even concern yourself with it. Okay. Here, I'll pull it up. Hang on. Okay. Soybean futures hours. Trading hours. Soybeans, futures and options, electronic trading. So the electronic market will reopen at 1900 hours. And for those of you who were never in the military, you simply subtract 12 from 19. What do you get? 7. So guess what time they're talking about? 7 p.m. tonight, Eastern. If you're on the West Coast like me, 4:30 this afternoon. It's already 1 o'clock here, so in 3.5 hours, the electronic session of the beans will kick into gear. Okay? And that is true Sunday through Friday, except Friday afternoon they don't reopen for the Saturday session because there's not one. So we have our battle plan for when the soybeans reopen for electronic trading at 1700 hours. Oh, wait a minute. No, I mean 1900 hours, which is 7 p.m. Eastern, 4 p.m. Pacific. So it's 1 o'clock here, so that's 3 hours from now for me. All right, now let me see who was it that asked a question about the crude. Okay, here was Iris had a comment. I'm seeing a pattern with your weekly trading zones that it is likely to first move down, miss a few ticks to hit the WTZ, then go up, and then it comes down. That's a good way of explaining it. Very good. Yep, it's that same little pattern I draw over and over and over. I even write about it a little bit out on the Facebook page, so if you guys never been there, you can go and read it. Look for the post that has the big yellow image with an N on it, what looks like the letter N. I can't seem to find who asked about the crude. Are you still here? And if you are, I'll be happy to look at it for you. Oh, Jerry, it was you. Okay, all right, let's do it. Let's go look at the crude. What month are you guys in crude? Did I hear Michael say you went to September the other day? September, okay. So GCLU. Here we go. Okay, now that's a 1 hour. I need to get a daily perspective on this, so let's start with the daily. All right, there's daily. Let's do this. Okay, so there's a potential for crude to find some support right here where it is at 105, because that's a 24% retracement. The more meaningful retracement that I look for is a 38, which is going to put it around $1.02. 50% retracement is going to bring it back to $100 roughly. 62% retracement would bring it down to $98. And then the swing low of this leg is $92. Okay. All right. Now see this little ledge right here? That's an area that is of some interest to me. The market put in a pretty good low right there. During this hour, it tried to break that low, and then it ran away from that low. Okay, so that area, the price is that. All right, the swing low there is 103.73. So I'm just going to write that on a scratch paper. So I'm interested in 103.73. And then our most recent swing high is 108.93. 108.93. Recent swing high. All right. Let's go look at an hourly. Now that 108.93 that I just had up on my daily, that's right up here. All right. And the recent swing low is going to be here at 104.80. Right? 104.79. Okay, so that's going to be important. That's okay. We got a double bottom right there. Basically, it's a double bottom. So now let's look at just this last leg. You know, just the last leg is really going to be from here. The eye wants to draw it from here. So you had a move and a retracement, a move and a retracement. Now you see that's one of the things about fibs. Fibs are subjective. There are people who would argue that you've got to draw it from here, and I'm okay with doing that. And there's others that would argue here, I'm not okay with that, and others who would argue here, I'm okay with that. These are the two spots I'm okay with. My philosophy is this. You either have to draw, and this is what I was taught, okay, and so I'm agreeing with what I was taught. I don't agree with everything I was taught about fibs, but this I do agree with, because you've got to try to take the doggone subjectivity out of it, or it's utterly useless, okay? And it is useless as a standalone trading tool, but it can be beneficial as a confirmation tool. Now, not to offend anyone, because I spent years and money trying to make it stand alone, and it would not do it. Thank God for the revelation of finally that that's a no-go. All right, so if we draw fibs off of the last leg down, let's see what that looks like. Okay. From where we are now, we've already hit that 24% on the way up. So the first spot I see for good resistance is 105.60, which also, I'm going to make this go away. That's the swing high of this candle. All right. Now, a trade I would love to take, but there's just not much room. If price breaks above this high right here, now again, I'm not suggesting this as a trade. I'm just pointing something out. If price gets above this swing high of this candle, looking left, we've already looked at the fibs. There's absolutely nothing between here and here but air. It's what I call an obstacle-free trade. Now, does that mean it's a slam dunk, guaranteed to be a winner? Take this trade, knock it out of the park? No, because, you know, news could come out, some new player could step up to the table that just wants to be short some huge amount of contracts. Anything can happen. Remember, you're sitting at a table on a slow day with at least 15,000 traders. And if you believe in the butterfly concept, then if you don't know what that is, Google it. All right. So, what price is this? The swing high of this candle is 105.44. I'm going to write that down so I don't forget. $105.44. Okay. Then the swing high of this candle, 105.66. Now, I don't trade crude. Michael does in the live trading room. I'm not a crude trader. Is the person that asked this question, Jerry, is a 20-cent trade something that's of interest to you in crude? It is? Okay. Now, you also just asked me, does that qualify as bearish engulfing? No. Well, no. You're talking about this candle here? Okay. No, because what needs to happen with a bearish engulfing pattern, it needs to be the proper context. You have to have a nice uptrend, and then you get the bearish engulfing. In fact, I think we have one here, okay, right here. See this? This is a daily chart of the S&P. So you had this nice ongoing uptrend for many, many days. Then we get this candle. The high is higher than the previous candle. The low is lower than the previous candle. That sets the stage for a multi-day decline. And look what we got. We got a multi-week decline. Okay. That's so the problem with what we have over here, with what we were just looking at, is the context. The context is not right. You're asking me on the daily, do we have a bearish engulfing? Okay. Well, let me find a chart I can use. One that's not occupied with something already. We can use this one. Yeah, we can use this one. Okay, so let's change our symbol. GCLU. Go to daily. All right. Okay. Now, are we looking at the same chart? I'm on a daily September crude. Okay, we're going to call this candle number 1, 2, 3, 4. Tell me which candle you're looking at. One and 2? No. See, here's what a bearish engulfing would look like. Let me show you. Okay, let's say we had daily price candles, and they're climbing like this, like this, like this, and like this. And then we have this day. Okay, this day is just the same as these days. And then we get this day. Uptrend, 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 uptrend. That is a bearish engulfing candle. And after that, what you then expect is for price to do this and this and that. And depending upon how you're trading it, you know, I'm going to encourage you to wait for confirmation on the following day. Confirmation can be different things for different people. For some people, they want to see a bearish day after the signal, and then they're going to sell the open of this day. Other people are going to simply sell the break of this low. Two ways to do it. If you're selling the break of this low, this is where your stop needs to be. Can you take a setup like this, drill down to the 4-tick range chart, catch yourself a short entry, only risk 8 ticks, and potentially be stopped out a couple of times before you hit the runner that takes you the distance? Yes, absolutely. Okay, so does that help? See, we don't have this. We don't have a candle where the high is higher than the previous candle and the low is lower than the previous candle. That's the definition of bearish engulfing. Okay. Remember, we counted this as number 1. 1, 2, 3, 4. Okay. This candle does not have a higher high and a lower low of this candle. This candle does not have a higher high or a lower low than this candle. This candle does not have a higher high or a lower low than the previous candle, nor does this one. None of those qualify as a bearish engulfing candle. It has to look like this. It can also be referred to as an outside candle. You'll often hear people talk about an outside day. Okay, on a daily chart, this bearish engulfing pattern here, you might hear them on the news going, yeah, we had an outside today in crude. And what that means is simply that today had a higher high than yesterday and a lower low than yesterday. Okay, does that help, Jerry? You got the concept? You can also go out to our blog. You can Google CFRN bearish engulfing right here. Emini futures bearish engulfing pattern. Go out and read that, and there's a couple other ones too. Okay. All right. So back to setting up this chart here, or this trade. Let's go back to our 1 hour. If a 20-cent trade is of interest to you, Jerry, then I would suggest, I got to move this up a little bit. The swing high here was 105.44. Let's go 105.48 to 105.61. 61 minus 48. Let's see. How about a 13-cent trade, Jerry? Does that interest you? I don't know if it does or not. Okay, so see, I want to clear this high. So I want to be long 105.48. I want to be long 105.48. And then I want to get out before this swing high. And if I'm not mistaken, that was also a fib. Let's go back and look at that real quick. And I was measuring just the last leg down. No, that put us right in between the 24. Oh yeah, this one is the up here. This one is the 38 fib right there. That 105 area, 105.66. See that? 38%. So that line is important for resistance for two reasons. It's a 38% fib retracement, reverse fib, and it's the top of this candle. Because you've got to use your imagination. At one point in the life of this hourly candle, because this candle opened right there, at one point in the life of this candle, it was green. It wasn't red, it was green. And it was trying for all its might to rally up the chart. But it got slapped down. It couldn't do it. Okay? That's what this wick is all about. That used to be green. Okay? So we know there's good resistance here. Not only do we know that there's good resistance from a support resistance standpoint, but now we also know that based on the last leg down, it's a 38% reverse fib, which also lends to the potential for good resistance. So we know why we're getting out there. You don't have to get out. You could trail with a relatively tight stop because, I mean, 38% fibs get blown through all the time. And this swing high eventually is going to get broken. All I'm attempting to do here is to set up or to present a high probability setup. Now, what does that mean? Does that mean I can put on this trade and not worry about getting stopped out? Not at all. I'm just pointing out an area on the chart where there is no obstacle, no support, no obvious support and resistance, and no obvious fib resistance from 105.48 up to 105.66. Okay, that help you? It's getting kind of late. I didn't realize how late it is. I thought we were going to be done really early because David had to take off, but yikes. I got to take care of lunch for my kids. So, does the candle at 5 o'clock on the 23rd have any meaning? Candle at 5. Let's take a look. This candle here, yeah, good question. Okay. In the context of this little downtrend here. Now these are hourly candles, so let's take a look. Price bounces off of this area, and then it holds, and it holds, and it holds, and then we close above it, and then we break below it, then we leave this long wick and bounce back up. So this is a good heads up to consider getting long. The question is, where do you get long? Okay? Now this is hourly. Now this is on, what day is this? This is on the 23rd at 0500. Okay, let's go look on the 4-tick range. Let's see if we can find an entry coming out of this spot right here. Now this price is, we're going to call it 106. So yes, this wick, after a nice little downtrend, that's great context. This is a nice heads up. Because you can see the markets, when you hear Michael talk about bottoming action, see the market has found an area where it can't seem to go lower. Because at 1 hour, see, this candle was red at one point, came all the way down to that area, then bounced, got all the way up here, came back down, bounced, came back down, bounced. This time it ran way down, but it came right back. See? So yes, good eye. This is an area to really set up and pay attention. This tail, another wake-up call. But how do we get into it? Do we just blindly buy the market? No, I think there's a better way. Could we consider buying a break above the high of this candle? Yes. Yes. Even better. A break of this high. And a little wee bit above it to get away from the noise. But let's go look at the 4-tick range and see what we come up with. All right, we need to first get rid of all the drawing items. And then GCLU. Okay, we're on a 4-tick range, and we want to go back to the 23rd at 0500. Okay, I'm on the right day. Okay, here's 0500. Now the price was 106. So we draw a line across here at 106. All right, now we got to put things in perspective, so let's take a moment to just do that. I'm going to have to scrunch it up, and then I'll unscrunch it. I just want you to be able to see as much as you can in this screen. So price is coming off some lows down at 105.50. It comes up through that 106 area, which we kind of, picked out on the hourly chart. No, wrong chart. Where'd that chart go? Oh, we're on the daily. No? Which candle did you have me looking at? Oh, you had me looking at this candle. Okay. I lost my spot there for a minute. You were having me look at this candle. See, we can't see on this south of that. Okay. We don't see anything there. So we're here at 106, July the 23rd, 0500. 4-tick range, July the 23rd, 0500. Now this thing, after it hits this 106, it dips all the way down to a swing low of 105.46. Now let's identify that on our other chart. Swing low right there, 105.46. I just want you to see how this translates from time frame to time frame. See, 105.46, that's the swing low. I do this for my own benefit as much as yours. Price breaks up through that area. Now, we don't see it as being so significant here as we are able to see it on that hourly, okay? So this is why multiple time frames are really important. So there's the bounce off of this area. So we don't really know anything's up there, or do we? Now that we've got our bearings, let's open this up a little bit. Okay. Now we've told ourselves that getting long above this swing high could potentially be a good idea. Now this swing high, since we're not trading that spot, we want to just measure the exact number. This swing high is 106.51. Now we have several hours of down action before we get back above 106.51. So I'm going to write that number on here so we don't forget it. 106.51. Okay. 106.51. So now we got to come back over to this chart, and we got to see where it is that we break 106.51. Because remember, based off the hourly, we're not interested in being long until we break 106.51, right? Does that mean there aren't opportunities along the way to 51? No, there are. You can see here, there's this bounce and this pullback. And there's this bounce that, I'm not going to go through and mark all these up, but you can. You can go through on your own chart. I want to go and find where it takes out 51. The area that we identified on the chart that would be a potential area to take a long trade. Okay, 106.51. All right. So now we're all the way up to 0700. This is actually a couple hours later. Now, coming into that, all right, and I talked about this the other day. When you identify an area on a chart, whether I put it out as a tweet or you yourself identify it, oftentimes the slingshot will lay up the trade for you slightly before that number or after. You can decide how you're going to take action, okay? In this case, the beautiful layup looks to me like was right before we hit that number. See, we've had our bullish cross here. We have our pullback to the BBC. We have very little drawdown. Do we have bullish divergence? We still do. You know, it's waiting on us, but it's still there. This is the up close. Of course, you do need a trend line. And maybe you have to use this one as your up close. So your entry would come on the open of this, 106.42. Let's write that down. That's an important number. 106.42. Okay. Now that would be entering on this candle right here. All right, now that's before we even get to that important number that we identified, 106.51. Because look what happens above 106.51. We get a pullback okay. We get a pullback right here. And I'm going to have to open this up. There we go. This is where we pull back. But do we still have bullish divergence? Yeah. Trend line. There. So we need an up close above the trend line of this. Even though it's not green, I know Michael has discussed this with you guys because I've heard it. Right there is the up close. Price pulled away way back here. I want to explain something else to you in just a second. The price is pulled away way back here. You had the cross, pulled away, pulled back. See, this thing's getting long in the tooth, all right? Do you have bullish divergence? You do. Is this the up close above the trend line? It is. So you're buying the open of this candle, 106.70. 106.70. Okay. That's right there. The swing high is only 106.78. 678. So there's 8 ticks in that trade. That's it. Okay. Now, why is that? Well, that's a deep question. Market does a lot of stuff. Take a look at this. Okay. Price was kind of bottoming out here. We identified a major low in the market. Well, no, this is pretty much it right across here. Okay. See this back and forth, this bottoming stuff here, and it's starting to climb. Okay. And then we identified this trade way back here. Now, this set up a beautiful trade going into that number that we had. And not only did this trade give up whatever it was you might be looking for. I mean, this entry was 106.42, went all the way up to 106.78. And so why couldn't it keep going? Well, this is something you always have to ask yourself. What's the average swing in any particular market? I don't trade crude. I don't know that I'm qualified to answer that question. I could go stare at charts and kind of figure it out. But if you like trading crude, you should do this. Because if you figure it out, it'll have more meaning to you than if somebody else tells you. I know and I can tell you the average swing, the S&P, is 3 to 5 points. Are there 10-point swings? Yes. Are there 2-point swings? Yes. Is the average 3 to 5? Yes. Okay. Got to ask yourself, how far has price moved? It's gone from 106 so far up to, yeah, it's only gone here to 106.78. So a 78-cent swing. I don't know how relevant that is on a 4-tick range chart because I don't personally trade the crude. I'm just using the same principles that I use trading the S&P, and I know that they're transferable. The only thing that's different is what the average swing will be. So you know that being long above this number is potentially a very good idea. You're given a textbook picture-perfect entry that gives you a whopper of a trade. This entry here, as the market is getting a little tired, kind of running out of energy, it needs to pull back and rest a little bit, if you will. It can only deliver 8 ticks. Okay. Is 8 ticks enough time for you to at least get your stop to break even, plus a tick so that you get stopped out without a loss? Yes. Do you go home a hero? Well, not off this trade anyway. All right. So now there's a change of power. Bears take it. Price pulls away. Price pulls back. You actually have bearish divergence. The trade goes nowhere. And in the context of the hourly, are you looking to go short here? I don't think so. Based on what you identified here. Now, also, once this happens, you should be having second thoughts about going long above this price. Look what happens. Okay, so going back to the 4-tick. It does give up another long trade here where all the criteria is met. And let's see. Where do we touch? We touch here, and you do have to have an up close. That's going to be this one, looks like. So if you're entering on this candle, the open is 106.80. The swing high is 91. So there's 11 ticks here. So there's no huge trade coming in here based on the 4-tick range. Sometimes there will be, sometimes there won't be. If you came in on the entry that was just prior to that, now it's really close. I mean, we're talking about getting in at 42 versus 51, but you're layering that on top of this hourly. And so getting in at 42 instead of 51, that's really putting you in this trade at about right. Let's go find 42. We define this area right here, okay, 51. 42 is right here. That's putting you in the trade right there. Okay. Let's see. I'm going to hit the rest of these questions really quick, guys. I'm suddenly exhausted. Oh, Jonathan, same thing as a stopping action where it runs out of people willing to trade either below or above the price action. Same stuff, different words. Exactly. Ken S. asked, do you look at the hourly daily to figure out the swing or something else? Ken, you got to explain to me what you mean by the swing. Which swing are you talking about? Ken, there has to be a way to trade the BBC as an auxiliary trade in the context of the larger trend. Well, there is. Of course there is. Become a partner and I'll teach you how to do it. I give away an awful lot in here, guys. I mean, I don't know if you've been around the net a time or two, but I don't know. There's not a lot of free stuff out there, but anyway. I do it because I love God, I love people. I love the opportunity that the market presents. People who are hampered by all kinds of things, economics, geography, social, whatever. Trading in the markets is the great equalizer. People who are born in poor countries with a little bit of seed money and a high-speed internet connection, they can literally change the world. People who suffer from physical handicaps and can't go outside of the home to work and earn a living to support their family anymore, suddenly they have the opportunity to earn many times what the average breadwinner makes. I say they have the opportunity. No guarantee that they'll be able to do it, but at least there's the opportunity. I don't know of any legal opportunity that exists anywhere in the world to make this, to have the opportunity to make this kind of money without a formal education, without even having to leave your home, and with a very low barrier to entry. You don't need $1 million to start up an Emini futures trading business. There's very few real business. I can't believe I said that. There's very few brick and mortar. Let me say it properly. There's very few brick and mortar businesses that you can start for less than $100,000, and things like a Subway and whatnot cost you anywhere from $500,000 to $1.5 million. So, Ken says the average move of a particular market. Example, you said the S&P is 3 to 5 points. Yes, that's true. Oh, do I look at the hourly or daily to figure out the swing or something else? You mean in the S&P? It doesn't matter if you're, well, you got to go out to some bigger time frame where you can actually see the swing, okay? And you need to, based upon the time frame you're executing on, you're going to look at some comparable time frame to see what those swings look like. You've got to go out to a time frame that's large enough to support. Let me show you. Well, here, I'll do this on the ES. Let me make all this stuff go away. Okay, here's a 4-tick range chart. We'll start over here. Swing high is 1694. The swing low is 89. It's 5 points. From 90 to 93, it's 3 points. Remember I said the average swing is 3 to 5 points. So that's a swing, that's a swing. Now, are these swings or are these little swings inside of a bigger swing? Well, let's measure. High is 93. The low's 85.50. So from call it 86 for the purpose of math. 86 to 93. Was that 7? 7. Okay. 86 to 93. It's another 7. From this swing high at 92.75, is that right? 93. Down to 89.25. That's 3 and change. Okay. And from 89 up to here is 94. So where's that, 5? Is that right? You get my point. So here I've reduced it to a pretty small amount, 4-tick range. That's most people consider that small. And we're able to see the average 3 to 5 point swing. Now what if I switch it out to 100, what if I switch it out to my favorite chart, the 10,000 contract, that's volume. It should give you a really different perspective. 10, 1, 2, 3, 10,000 contracts. Okay. All right, the swing high here is 95. The swing low, 82. That's a big swing. Here, I got to scale this thing out some. Let's see what we got. We had a huge move today. Let's see if we can find some normal territory. Come on, give me some more data. There we go. Let's see what we got. Okay, we got a little double bottom here, so we can agree that this is. So we got a low here of 88 and a high here of 95. So that's a big swing. That's 8 points. And then from 85, or 95, I'm sorry, down to 86, that's 9 points. We got some big swings. And from 86 to 91, that's 5 points. And from 91 down to 86, that's 5 points. And if you start, see, you can depends on how you want to, see, here's 86 up to 91. 86, that's 5. All right, from 91 down to 87, that's 4. So it's swing up, swing down, swing up, swing down, swing up, swing down, swing up, swing down. So that's why I say that the market that you're going to trade, you need to give thoughtful consideration to the time frame you're going to execute on, okay? And in our case, it's the 4-tick range chart. So I'm going to look at swings. Now, see, if I were trying to count 3 to 5 point swings here on the hourly chart, that would be very difficult to do, okay? This is not going to convey the same information to me that I'm going to get from a tick chart or a volume chart or a range chart. So you've got to take the markets you have an interest in trading, okay? Take a look at it, and you know what? Get out a pen and paper and do the legwork. Figure out what the average daily swing is. We do have a tool called the average true range. Okay? I should have just made you do the work. Insert indicators. Volatility, average true range, look back period 14. Now that's the average true range of a 1 minute candle. So using that math, what's the average true range or swing of an hour, or 3 hours, or 24 hours? Follow me? Okay. I got to go, guys. It's been real. It's been fun. It's been real fun. You see what I said earlier about consider taking some or all profits now as we approach the WTZ? We got within, see, we're at 66. We got within 5 ticks. But this thing started acting a little funny. And then on this candle, it looked like it was going to go ahead and complete the journey. But it didn't. See? That'll happen sometimes. Trading zones are an area. Now let's go look at the 4-tick range on the S&P. And I'm going. ES. Oh wait, this isn't the right chart. Let's get rid of this. Okay, this move we're on right now, did we have a trade? Nope. Well, let's see. Nope. No. Nope. Answer is no. On this little last bit of a move, which has been going on for about 30 minutes, could we get a move? I mean, could we get a trade? Yeah. But again, you know all the criteria that has to come together. Okay. Now, if you were just trading the cross, did the market move far enough? Yeah. But what if you'd have traded the cross here? You'd have got stopped out all over yourself. So again, got to put things in their proper order. Okay. Learn how to do what we're teaching in the live trading room each morning first. Get that down, and then you can take a look at some of the other stuff. We have a lot of tools that that give you a lot of options as a trader. Okay, but one step at a time. Okay, guys, I've given you the very best of all. All right, good for you, Ken. Good job. All right, guys, I love you all very much. You're an important part of my life. Otherwise, I would not be hanging out here at 2 o'clock in the afternoon. Officially off the clock. Oh, that concept is even funny. Off the clock. Yeah, right. Okay. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.